Hello everyone, welcome to another live stream. I hope you're doing well. I hope you exploited yesterday's news. I did a little bit through the Aussie dollar, and if you don't know what happened, I'm going to bring you up to speed because we actually had a pretty important event there. So let's put it on the screen. If we go to market moving, so first one, like Trump, I have suspended 50% tariffs on Canada. That was a bit bearish for USD CAD. So, but that wasn't the big one. The big one was this. So the US Treasury Department announces increased sizes of nominal long end. That was the big one. That was the market moving. Okay. And also, let me just double check the schedule for today. I know yesterday we had a bit of a different schedule, so just make sure that I haven't opened the stream too early. No, and I'm on again at 3:45 p.m. my time. Okay, amazing. So what does this mean? What does this mean from the US Treasury and Mr. Scott Bessent? It means that they are going to do some sort of a quantitative easing. They're going to increase the demand, artificially increase the demand for bonds, and the sacrifice, the scapegoat, will be the DXY. So the US dollar will have to suffer for this to happen. Now, the Aussie is, okay, starting to climb up a bit here. So they're basically moving money in the system, right? They're moving money in the system. They are bidding up bonds. So like bond prices are going up. And they're trying to drop the bond yield because the bond yield is now at the level from 2007. So that's pretty concerning. That's pretty bad. And Scott was seeing this. So Scott Bessent, Secretary of the Treasury, he has a funny tie here. What is this? He just looks kind of like a clown. I'm not saying he's a clown. I'm pretty sure that he's a serious businessman, but he kind of looks like a clown here in this picture. So we're back at the 2007 levels. Really concerning. A big problem for the United States. It means that people are selling US bonds. It also makes the US debt more expensive to repay because the higher the yield, the more expensive or the better yield you get as an investor, and the more the US government has to pay you if you're holding government bonds, right? So we had the big drop. We had the big move lower right there. That was on the, well, basically yesterday. It didn't really continue today, but it did tell you that the line in the sand, the kind of the line that Bessent does not want to see get crossed, is 5.3% on the long end. For the 20, it's 5.3% as well. Yeah, 5.3% seems to be like the line that cannot or must not be broken. Now, the Treasury has a bunch of tools in their toolbox to try and do this movement of funds, to try and manipulate the bond market. So they have started to implement the tools. Now, it had major implications for the market, which is pretty interesting because August was supposed to be a quiet month. We didn't have much planned for August, right? As far as like scheduled events, there was very, very little going on. So the markets just went a bit crazy. Like the DXY lost a bunch of value yesterday and is continuing the drop. Again, so you can't just bid up bonds and not sacrifice anything. Something needs to suffer. And in this case, it is the dollar. So they chose to sacrifice the dollar to stabilize the bond market. And it's kind of an intervention. It is similar to what you got with the Bank of Japan and the Ministry of Finance in Japan on the 30th of July and on the 31st and on the 3rd of August. So pretty similar thing, except the MOF, the Bank of Japan intervention, was on USD JPY, while the US Treasury intervention was on the bond market. Okay? Surindra, if you're gonna spam, I'm gonna have to block you. So if you want to stop, you can stop. If you don't want to stop, you'll get blocked. That's the way it's gonna go. So I'm in Aussie dollar. Took this position basically in the morning, yesterday in the morning, right before the big news announcement, right before the news happened. Let's see, how many viewers do we have? Okay, it's nice. Viewership is looking pretty good. It's now in profit. It's doing pretty well. I'm pretty happy with this position, and just the dollar weakness is helping me personally. Like even before the thing that we had yesterday, I was bearish on the US dollar. So I'm betting that we don't get any rate hikes this year. Let me see if... Come on. Okay. No. So it looks like there's some sort of an issue and we can't seem to load. The rates. Anyway, the market is still expecting a rate hike from the Fed. I'm saying it's not going to happen. I'm saying pretty much that the Fed will keep the rate the same. So there will be a more dovish Fed, right? The market is expecting... so the market is expecting one hike. I'm saying no hikes, which is or is interpreted as dovish, and it is bearish for the US dollar. So for the next NFP, CPI, Fed meeting, I want to go into those events being bearish on the dollar, and the best opportunity, in my opinion, is in the Aussie dollar. Now, yes, like EU and GU definitely had better performance. Like Aussie dollar is kind of lagging behind them, so the Aussie does not seem to be the best pick at the moment. But I'm gonna stick to it. I personally would not buy the euro or the pound at these levels. I think they're a bit overextended. Now, the biggest sort of mover yesterday was actually the Swiss franc. So like USD Swiss, just a massive meltdown lower, just a massive candle. Euro Swiss, same thing, big meltdown lower, fat red candle, very interesting to see. Personally, the target that I have for USD Swiss is 0.792, 0.791, something like that. I think that is achievable. I think we can hit those levels. So yeah, I think more downside is there for USD Swiss. The reason that I got for the massive move is, first, the dollar lost a bunch of value because the dollar is the scapegoat in this case, and the dollar is being sacrificed to help the bond market. And second, the Swiss. So the markets were very much short. The positioning was highly short on the Swiss franc. So it then caused an unwind of positioning. If positioning is extreme, either to the upside or to the downside, in this case, bearish positioning, if it's extreme, you get a black swan event like this one, and you get an unwind of the positioning. You get a massive explosion in the value of the Swiss. I was in Swiss yen, so I was in this sell position from the 27th of July. I took 60% off somewhere near the bottom here. I let 30% run. Then I trailed the stop loss, and I got taken out yesterday near 198. So if you do the math, net, I was up 1.64% on this position. So I took 3 exits. Here's the entry. Here's the stop loss. So the average reward to risk 1.64. This, by the way, was a signal in the A1 Trading Discord. Aussie dollar was a signal in the A1 Trading Discord. So if you want to join the A1 Trading Discord, if you want to get all of my positions, all of my trades, I've had a really good year so far. I can show you my Darwin X. So my Darwin X is up. Let's see, 25% on the year. And again, most of the trades that I took here were called out in the Discord. I'm taking some other trades which I'm using for forward testing, for new strategies, so I'm not sharing those. But like most of the trades that you can see here for this recent outperformance have been called out in the Discord. I currently have 248,000 euros under management here, so that's pretty nice. And I'm supposed to get a payout pretty soon, so we will see how that will go. Let me just see. So this week was the equity curve like? Okay, so it was up 2.5, then down to 1.9, and now back up to 2.24%. Interesting. Anyway, if you want to join the A1 Trading Discord, you can use the code MARCO to get 15% off. So that's for the A1 Trading Discord. It is for the Edge Finder and the stock box as well. All of the links are in the description of the stream. And now give me 1 second. I'm going to go grab a glass of water and I'll be back. Okay, I'm back. By the way, you can also join the A1 Discord for free. So if you want to test it out, see if you like it, there's a QR code on the screen. There's a link in the description. And I'll post the link to join the free Discord in the comment section as well. So let's copy this. Comments, paste. Okay, so you can find it in multiple sections. Bitcoin, really interesting. Massive breakout to the upside. Definitely unexpected in my opinion. So personally, I was seeing Bitcoin the last few days or last few weeks. It was flat. It was doing nothing. Let's see MicroStrategy. So MSTR. Yeah, definitely move up. So MicroStrategy moving up as well here with Bitcoin. So let's go back. Broke the 200 SMA. Pretty bullish sign right there. Yeah, looks pretty interesting. I mean, this is a massive breakout. This is a big breakout right here. Let's see top setups. Bitcoin. Neutral on the Edge Finder. I mean, I wouldn't buy it here. I think it's definitely overextended at the moment. This had a massive rally, and trying to catch it, trying to basically chase it is not gonna be the way to go for me. Maybe a retest of the 200 EMA. I don't know. Like we have the halving cycle. The bullish period of the halving cycle starts in October 2026. So we are still currently in the bearish part of the halving cycle. I think 80K is a good initial target. So personally, I don't think that Bitcoin will go to all-time highs. I think we maybe have a rally to the upside to 80K, and then we could very easily drop back down. So like this, and then we could very easily drop back down, have a bigger correction. Because if you look at the past corrections on crypto, they were bigger than the current one. So the current one from the peak to the trough, 54%. Previous ones were usually 70 to 80%. So I would say more downside could be needed for Bitcoin. Okay? In the big picture, short term we could get a rally to the upside. Would I want to participate? Maybe if we get an Edge Finder top setups print. So if this prints bullish, and if we get a pullback, if we get a bit of a correction to I don't know, maybe the 200 SMA, that could work. So that's what I want to see as far as crypto goes. Now, gold also had a Really interesting move yesterday, right into the 200 SMA. Big fat blue candle, hit the 200, retraced off of it. Again, all of this business with the bond market, basically, it's mainly bearish for the US dollar because they're trying to move the money around. They're trying to hurt the dollar to help the bond market. So anything that is paired against the US dollar just went up, right? So the worst thing you can have at the moment is you can have dollars in cash. Like that's the worst thing you can have because, and people know that, like people watching the markets, they know that, so they want to move away from the dollar into pretty much anything else that's like the counter weight. So that is why like actually stocks didn't have such a great day yesterday. That's interesting as well. So stocks stocks were blue yesterday, but not a massive move, especially not compared to crypto or compared to gold. Interesting, very, very interesting development. I actually think, like I was listening to Nick and Chris Pulver talk yesterday, and they mentioned gold was kind of the best bet for this market environment. And it makes a lot of sense. Gold, essentially, with money printing, with the dollar going down, with a dovish Fed, with inflation possibly kind of going up in the future and the Fed not hiking rates, the stock market can have a crash. Like the stock market could suffer from this massive money print. Well, could it really suffer? I don't know. It should be bullish for stocks. But if you get a crash on stocks, possibly in the next, I don't know, few months, year, 2 years, gold can actually go up. So gold can catch a bit on that. So gold is a pretty good thing to hold, especially if they're gonna continue to print, if they're gonna continue to devalue the US dollar. Like gold is a great bet. It's kind of the main purpose of gold is to hold value. So as the dollar is losing value, gold continues to hold value and continues to catch a bit, continues to go to the upside. Almer says, Marco, do you trade futures or just CFDs? So I trade mostly CFDs. I do trade stocks like through spot, not through CFDs, and I do trade through CFDs as well, depending on how much leverage I need on a specific stock. Futures, I've never traded. Never. Options, I don't do either. Spot currencies or spot gold, spot silver, yes, I can do that as well. Like the prop firms that I do are using CFDs, Darwin X0 CFDs, FTMO CFDs, Alpha Capital, DNA funded. It's all basically CFDs. So that's what I mostly trade. Now CFDs are not the greatest thing in the world. Like the fees can be pretty high, and like the swaps or the holding fees, the overnight fees can be really high as well, especially for currencies with a negative swap rate. But for me, they're fine because I don't have a massive personal account. If you have like 100K or above in your personal account, then probably you can get away without using CFDs. But anything below that, you most likely will need to use CFDs because of leverage. And because I'm in Europe, I'm kind of limited as to what I can or cannot trade. So for example, US ETFs, I can do, right? So Europeans are banned from trading US ETFs unless you have a professional account, and professional accounts in Europe start from $500,000 or above. So it gets a bit complicated, but CFDs are my main thing. And personally, I've been making good profits just for CFDs. Like, yes, the fees are high. Yes, they can accumulate over time. Yes, if you sell USD/JPY and hold it for 2 months, the swaps will be crazy high, but you can get around it, and you can still make some healthy percentage. Let's look at financial juice. So let's look at the breaking news. Forex. Let's see. So the last market moving was the US Treasury Department. And for Forex, let's see what is in red. Not much so far. You had some Australian stuff. Okay. So the Australian unemployment rate went up. The employment change was bad as well. Yeah, that's not the greatest for my not the greatest news for my Aussie dollar position. Let's see the calendar. We need to go back to the current week, this week. Yeah, so the Aussie news, not so great. Unemployment ticking up, employment change negative. Was there a revision? Let's take a look. Yeah, revision for the last time. We're gonna see. I mean, the last RBA meeting, so the last Australian Central Bank meeting was bullish for the Aussie, was hawkish. There were like 4 members calling for a rate hike, which is bullish. So I think until the next RBA meeting, we could see the Aussie catch a bid. And that's why I'm going to keep on holding it for now. So I kind of wish I was in EU and or GU because the move was much bigger. Like if you look at percentage, 0.81, 1.07, and this one, 0.61. So kind of muted. Also, give me 1 second. Lunar Echo, hello. Alpesh, natural gas. I've never looked at, I mean, I have looked at that, but I don't pay a lot of attention to it. So let's see, natural gas. Okay. Well, I don't know anything about this. I'm not going to be of much help. Like I can do oil if you want. So let's do oil. Brent is up on the day. Okay, it's starting to continue up. Interesting. Like this, the strait is still closed. If you look at the IMF port watch, Hormuz traffic, so yeah, nothing happening there. Like the last print was August 16th and it was near zero, so it was pretty bad. The trade volume, zero as well, like close to zero, almost nothing. So the strait is still clearly closed. Oil prices creeping up higher. And yeah, I think we stay elevated. I think we stay inside of this range. I think the strait continues to be closed. I think that Trump and Iran don't have any sort of a deal. And I think that this stays between, let's say, 90 to 110. So until the end of this year, at least. Until the end of this year, I think something like this happens. Kind of range-bound price action inside of this area. Now it is bringing pressure to inflation, but it doesn't seem to bring on a lot of pressure. Like if you look at the CPI in the United States is actually falling. So let's take a look at the US oil. US oil Kind of going up on the day as well. Staying elevated here, but not a massive issue. Not a massive problem, I would say. So the CPI falling off a bit. Peter, good morning. Helena, good morning. Do you think the US will cut rates this year? No, I don't think so. I don't think so. So let's take a look at the Fed Watch tool if it will load. No, still nothing. Okay. Still nothing there. Let me just see. Ethereum going up as well. Following Bitcoin. MSTR. Yeah, like I would say before we get another bullish cycle on crypto, I think we need to wash away MicroStrategy. I think we need to see MSTR go bankrupt and just wash away Michael Saylor. It's a Ponzi scheme, so yeah, I just don't think that this can survive. Let's see, TLT. So TLT going up, which is to be expected. So this is the price of the 20+ year Treasury bond ETF. Basically an inverse correlation between the bond yields. So as the yields go down, the bond price TLT actually goes up. Okay. So that's basically how it works. I also saw that a good trade was possibly buying TLT near this bottom because it made a new 10-year low. So that was a good opportunity. Yeah, you can see this low right there. Would I do the trade? I don't think so. I would rather just be bearish on the US dollar. Just sell the US dollar through AU. Again, AU not the best option, especially because of the recent employment, but oh, link, okay. Let me just send the link to James. Okay, so you have James coming on in 2 minutes. So to wrap things up, this is going to be the end of my first segment. You can catch me again in, I think, 2 hours during my second segment with Alan to sum things up. So US Treasury news was pretty big, pretty unexpected, came out of nowhere, massive implications for the market. The biggest benefactor seems to be the Swiss franc because it's really catching a bid. So things like the dollar Swiss drop, massive drop. Things like Euro Swiss, massive drop as well. The dollar is going to suffer, so the dollar is being sacrificed to prop up the bond market, and I'm looking to continue with that theme. I'm looking to sell the US dollar going into the next few weeks. Okay, so that's about it for my segment. In 30 seconds, you will have Forex James. I'll play a quick transition, and yeah, that's about it. Thank you for watching. You can catch me again in 2 hours.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday, we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello, hello. How's everyone doing? Seems Marco is still there. Oh, wait, it's switching. It's switching. How's everyone doing? There we go. I'm online. How's everyone doing? Happy Thursday. Almost the end of the week. We can all chill out very soon. Hope everyone is okay. I hope no one's been caught out this week. It's been a bit of a rough one. Let me just make sure okay, cool. Just need to make sure the mic was right. Again, for anyone that is new, I am currently traveling, so I'm just having to use a laptop microphone. So I'll do my best, but it might not sound great. So I do apologize, but it is what it is. King of Kings, hello. Christian, good to see you. Jeremy, Christoph, Ray Beast, good to see you guys. Hope everyone's well. Okay, so what are we looking at today? Not much. I mean, oil is doing really, really well. So oil's strength very clearly isn't doing much for the dollar. I made the argument this morning in a YouTube video I made that the US dollar is now at a point where it's too weak to be propped up by the oil prices. So what I mean by that is if we look back to, when would it be? Sort of February onwards until maybe the start of August, we saw obviously oil prices doing very well. We saw the dollar quite strong. Obviously, we also had the dollar fundamentals that were quite strong temporarily. And it was a pretty good situation. And that's when the dollar was heading back up to around 102 here. Now, the problem is we've obviously had or currently got yields coming lower on the news we had. Was it yesterday or the day before about the Treasury? I can't remember exactly when it was. But that also pressured the dollar. But again, we are seeing oil prices up, but it's clearly not enough to bolster the dollar. So I do agree with what Marco said. I think being short dollar is the way forwards at the moment, which is a little bit unfortunate. It's fine, but it's a little bit annoying because I was really prepared. I was really preparing to start putting on some heavy long positions at this breakout. Luckily, we didn't get the breakout, so I didn't really get into any trouble there. But it's just a bit annoying because, I was planning this long position on the dollar. How am I going to execute it? What's the budget? What's the exposure? Which currencies are we going to go for? Or what the expressions are we going to go for, I should say. It's just not played out like that. So I'm still long on dollar yen. This position is still doing quite well. I've got no problems with this one. Both positions are in profit and they're both relatively small. And the idea, again, as I've been saying, is basically just benefiting from the carry trade. I don't really care too much other than that. If that dynamic begins to break, so for example, if the Fed decides they're going to cut rates and the BOJ hikes rates, then yes, okay, I'll have to admit defeat. But until we get the carry trade regime breaking, I would still say most yen pairs are still a good buy position. I'm still in gold. I completely forgot to put this on my chart, so I forgot to mention it yesterday, but I did add another position into gold. So around 4,356. So I've currently got 3 positions on. They're very, very small. These are all 0.01 each, so nothing crazy. So the problem I've had with gold is that previously, when we were down here around 4,000, I kind of expected gold to start heading down towards 3,500, which obviously didn't happen, but that's what I was prepared to do or prepared to execute around. So I had positions or pending positions from 4,000 every $100 down, 3,900, 3,800, 3,700, so on and so on. Now, obviously, that's not happened. So now I'm stuck or was stuck in 2 tiny positions that weren't really meaningful. So my plan now is to basically do the same approach, but actually go into the upside rather than the downside. So I'm looking to get back in another position around 4,200 if we can see a pullback, and basically just adding in positions on gold to the long side. I think it's a very, very straightforward idea. But yeah, I think metals are in a great spot at the moment. James, you got you got your GCSE results. Very good. Yeah, my brother got his GCSE results today. He did pretty well, so I'm glad to hear it. For anyone that is in high school in the UK, congratulations on results day. I know it's quite a big day for you guys. However, if you didn't do well, don't worry. I didn't do very well either. Everything can work out, especially with the internet age we're in, and especially AI. I'll be honest, if you're an entrepreneurial type person, it doesn't matter too much as long as you've got some common sense and you can spot demand and supply issues in terms of what services are needed but not supplied. You can start making some money. Anyway, let's move on. ASAP, hello to you, my friend. Raby says, so next year after A levels, James, I'm coming to the UK for university. Oh, is GCSEs not just a UK thing? I thought that was just the way the UK operated. But anyway, good. Let me know when you're in the UK. We might be able to get a drink if you're over 18. Is it an objection for you that CAD Swiss broke the 61.8? Let's have a quick look. So we are still in pound CAD. It's not looking great, so this one might just be a bit of a loss. I'm still in Aussie US dollar. So I've got my stop trail just below this previous low here on the H4, and I'm just going to let this one run. I've got no hard take profit, just trailing stop, and again, benefiting from that weaker dollar. I did take an L on euro dollar as well, selling that market. So Australian dollar, US dollar is a nice way to make up a little bit of the short exposure I had on the dollar and the loss I took there. So what was it? CAD Swiss, you said, Christoph. Let me just double check. Yes, CAD Swiss. Okay. So actually, first of all, let's just see. Do we have, let me just get rid of the neutral readings actually before we go any further. Do we have a CAD Swiss reading? No, it doesn't look like we do. I'm not sure we did yesterday either. I'm not 100% sure. What about the short side? No. So there's no CAD Swiss reading, meaning I'm going to go into this completely neutral. I've got no directional bias. Now, it's broken the fib. So is this a trade breaking idea? At the moment, yes. So what I don't like about this is we've created this new lower high. So the only way that the only reason I wouldn't care that the fib is broken is if we get a clean follow through back to the upside. We didn't get that. So the fact that we've not we did close inside the fib, but then it was followed very quickly by a bearish candle and then another bearish candle. It just tells me that buyers are not very dominant at the moment, especially after the move we've had over on Wednesday. Yeah, it's just not looking great, to be honest, Christoph, in my opinion. Doesn't mean the trade couldn't work, but obviously my setup here is just not, it's just not there. So Ray Beast, what are you going to be doing in university? I would assume from everything you said, it would be like either mathematics, finance, economics, that type of thing. I hear you talking a lot about models and things. So I would assume that's probably a path you're going to take, but let me know. I've noticed that with gold, you never take short-term trades with take profits. I do, Christian. It's a good point, actually, because I haven't done that in a long time. And the only reason that I'm doing, I'm placing positions the way I am, which is this sort of DCA method, is because I can't get in on a short-term basis. It's not a case of I don't want to. It's just I just can't because there's just no entry here. So if we draw the fib from the low to the high, okay, well, I want to see a pullback to 61.8. You know, back here, this is where the fib previously was drawn. I want to see a pullback here into these previous daily highs. We didn't get that. We've now broken above this level. So if we redraw the fib to something like this, there might be an entry around this level again, but are we going to get that? I don't know. The dollar is showing serious weakness, and the way I positioned or the way I've sized these positions is so small that, to be honest, it doesn't matter either way, because I do expect gold to head back to its all-time highs and even higher in the future. So when I'm saying these things, it's not a case of I think that's going to be the case in the next 2 weeks or 3 weeks. I think it might take 6 months or a year. It could be longer than that. I don't know. But due to that, I don't really want to expose myself to a stop loss. I would rather do it in this way with these tiny positions over time, spread out every, $100 or $200 increments. And that way, if the market starts falling and the trade's just not working out, I can manage it much more accurately. So for example, let's say gold now decides that it's just going to drop to 3,500. Okay, well, I'm not necessarily going to hit a stop loss. I can take these very small losses that might be $200, $300, $400 each. Worst case, really. I mean, it might be slightly more, give or take, but you get what I'm saying. Small losses. And then I can start re-adding in at better prices rather than having to worry about getting stopped out, then finding a new entry. I really like DCA approaches, especially for longer term ideas like I've got with gold. So to actually sort of add on to that a little bit, if we did get this fib pullback, let's say, just again, argument's sake, let's say we got this, I wouldn't be opposed to entering. It wouldn't stop me at all. So I would enter a trade like this. Now, I wouldn't close these add-ons, or sorry, I wouldn't close these DCA positions, but I would reduce my size on the shorter term idea, just in case, it doesn't work out. Then I'm going to take a full 1% loss or 2% loss on top of the DCA loss positions. So yeah, I'm not opposed to it. I'm not against it. It's just there's not been an opportunity for me to do that. Can you take a look at Euro Yen? Yeah, we can take a look at Euro Yen. Someone else says Euro Yen, it's interesting. Okay. Oh, you take a quantitative finance degree. Very good. Interesting. I think LSE, so London School of Economics, might be a good play. UCL, I think, is quite good in the UK as well. It's also in London. My girlfriend went to UCL. It's one of the top universities in the world. I think it's like top 5 or top 10. But yeah, there's a lot of options in the UK. Anyway, we'll move on. Is positive swaps on your gold? No, it's not. I am losing small on the gold positions in terms of the fees from the broker. Okay, so we'll do Euro Yen and Aussie Yen. Okay, perfect. Do Aussie Yen. Euro Yen first, because that's what I think that was asked for first. So yeah, this is actually a very good example of what I was saying. I don't see any reason to be selling these markets. I think the base case is they will continue higher. And when I say they, I'm talking about the yen pairs, the major ones. So dollar yen, euro yen, pound yen, Aussie yen, pretty much across the board. And the reason for that is because I just do not see anything that would change that direction. Again, as I said earlier, I think the Bank of Japan could hike rates. I don't see that as an impossibility, but the yield gap will still be there. It's a case of, okay, well, if let's say the Bank of Japan hikes to 1.5% interest rate, and I don't know, the dollar or the Fed stay at 3.75 or whatever the Fed's rate is there, or the ECB, whatever it is. You've got to then figure out, is the carry trade still alive? Is it still beneficial to borrow yen or sell yen? Well, yes, I would say so, and buy dollars. I think that whole regime and idea behind it is still completely intact. So when it comes to this market specifically, I would be very, very cautious around these previous all-time highs. Now, when trading yen pairs, you've got to pay attention to dollar yen. So I wouldn't imagine, oops, I didn't mean to move that. I wouldn't imagine we're heading into a intervention yet. I just don't see a reason that the MOF would do that. So when dollar yen starts getting back towards 164, then I would start being quite cautious on other yen pairs. So dollar yen, pound yen, Aussie yen, so on and so on. Because dollar yen is kind of it's the benchmark, really. This is where we look at to gauge, is the MOF ready to intervene, or is it likely? So I wouldn't say it's very likely down here, just because, we've not really seen any movement since their interventions in the first place. So when or if dollar yen does reach the 164, then if you're in Aussie yen, then start paying attention. You might want to trail the stop losses, move to break even, take profits, whatever your strategy is, and just take caution that way. But then in terms of actually getting an entry, it's very difficult on euro yen, because we've already pretty much corrected the entire move here. So I wouldn't say there's really any way to get in unless we get some sort of pullback. So fib from the low to the high. And then I would just continue to try and find these 50% retracements. But other than that, I really do not see anything. And the same applies for Aussie yen here. So actually, let me just clear all this. old drawings there. So yeah, I'd be looking at the previous highs on the left, and again looking for fib from the high to the low, seeing if we can get some sort of 50% retracement or 61.8%. Other than that, there's really not much we can do here, in my opinion, for the way I trade, of course. You took some Visa longs around 350. Very good. Congratulations. Mega Danger. Hi, James. Hope all is well, mate. Yeah, all good, my friend. Hope you're well as well. Good to see you here. Euro dollar. Crude oil is looking attractive for a short. Interesting. Okay, let's take a quick look at euro dollar, then we'll move on to crude oil, and then I'll go back to the chat. So actually, let's just see, is euro dollar still very bullish? It is. So we've still got a very good reading here, +8. So I would still say being a buyer is absolutely the way to go here. I just realized my indicators aren't on. Hold on. Let's get rid of the 100. Okay, there we go. So, yeah, there's a couple of things going on here, actually. So I would be very, very cautious around this trend line. Now, as I always say, I don't trade trend lines. It's not a bit, well, if they're really obvious, I'll draw them on, but it's not something I really trade around or do much with. It's more just for visual references. But in this case, what we can see is this trend line here has been in place since around 2018 on the short side. On the long side, we've had this trend line since sort of the end of 2022, give or take. Now we did see these sort of triple rejections off this trend line previously this year. Euro dollar looks like it's coming back up. So the likelihood of a breakout and higher, I would say, is actually quite low. And that's, again, just based on what I can see here historically and also on the seasonality of euro dollar. So based on just technicals here, I actually wouldn't mind a speculative short, but, and the big but here is I'm not going to do that until I've got confirmation. So in the short term, I would say long positions are the way to go with, again, caution around the sort of trend line that we've got on the higher time frames. Okay, so let me just think here. So where would we take the high and low? I guess we'd have to use kind of this daily time frame because the H4 is a little bit messy. So yeah, fib from the daily low here to the daily high. The fib then lines up slightly actually with previous structure here on the left. You can see we have previous supports, turned resistance temporarily until the breakout. So I would be actually quite happy to take a long position like this. Take profit just below this trend line, just in case we get some chop or whatever it may be. Whatever, not a big deal. In terms of stop losses, though, I'm not sure I'd want to have my normal stop loss at the fib low, just because I think the take profit is so limited here. So I think I would actually just reduce the stop loss quite a lot, just to this minor low on the H4 here, and just use this as sort of a protective layer. If this level is hit, you know, we're stopped out, fine. I'll take a loss, no problem. But this is kind of what I would expect, you know, based on, again, the fundamentals. The H4 trend's bullish. The daily is also bullish. The technicals look okay. You know, we are creating these higher highs, higher lows. It all looks very, very straightforward. So I would just be looking to basically buy pullbacks on euro dollar until, again, we get to these previous highs in the trend line. I don't really see a reason to do otherwise. Just thinking, I don't really think we've got much of a central bank advantage either way. I think we are obviously seeing the markets pricing out the expectations of a Fed hike. I don't really think we're in much of a concern with the ECB either. So yeah, I would take it pretty much on face value there. Oh yeah, crude oil. Forgot about that one. Okay. Where is crude oil? Down here. Yeah, okay. So in terms of going in for a short position, I honestly don't really see it. I think on a technical side, yes, maybe shorting, you know, the sort of resistance, looking for maybe a double top type idea, that could work. Maybe some sort of bounce off the trend line. However, the problem I've got with oil, and we are also getting this bearish reading actually, so that's something else to take into account. So yeah, maybe it is aligned, but the problem I've got is just obviously the exposure to the headlines. I do not like the idea of sitting through a short position and then, you know, we're on Thursday, then we get into the weekend and we get some sort of escalation on Sunday night. And then, you know, as soon as the market's open, it's stop loss. I just don't want that type of exposure. Excuse me. So for me, it's more just a case of avoiding the stress of having to deal with it. But again, on the surface level, the technicals and the edge finders seem fine. So yes, maybe a short position off this level does make a little bit of sense, but for me, I don't really like it. Hold on, let me just see what's going on here. Do you see any entry on pound Swiss long? I know we've been watching pound Swiss, but is there anything here? I suppose maybe an idea of buying support, but I don't see an entry for me. There's just no fib level within this. The daily is bullish. The H4 is, I suppose, bullish here as well. Okay. So I suppose what I would want to see here for me to get interested in a buy is a close above this previous high and a close back above the 200 moving average. That's really all I can see here. Other than that, again, there really isn't a setup. There's no fib level I can draw here. For example, if we take the fib from the low to the high, we're basically back at the low here. So I can't draw a fib. I can't really do much. I would say yes, long positions. Actually, hold on. Long positions would make sense. But again, it's more just a little bit of caution for me in terms of actually trying to get the entry. Something else that we have been paying attention to on the Swiss pairs is this weekly time frame. So what I don't like is the way this market behaves around the 200 weekly. So every time we get up to it, we seem to just fail completely. So it could actually be an idea of we're just seeing this pattern repeat and we're ready to continue lower. Now, of course, the fundamentals don't warrant that idea. So what we could see actually is a return back towards this 200 weekly moving average, then a continuation lower and following this overall weekly bearish trend. So I think there's two ways to look at it. Again, the H4 and daily timeframes do look quite bullish, but then the weekly time frame is very, very bearish. So you need to obviously account for that when you're trading this market. May I have a look at net options volume on gold? Okay, let me get back to that in a second then. Is the treasury intervention already implemented? Yes. If you're fundamental analysis, why still you indicate a macro? Well, if you fundamental analysis, I've got no idea what that means. Indicator on macro. Yeah, I'm sorry, my friend. I need a bit more in detail on that question. What's the next move for gold? Tell you what, my friend, if you go on Amazon right now, order me a tarot card set, an 8-ball, a Ouija board, and a wizard's hat, I might be able to give you an idea, but unfortunately, I can't do that right now. I don't understand that question. Yeah, I've seen it quite a lot on these streams, and in general, actually, in Instagram DMs and so. What's going to happen next on gold? What's the next move? Honestly, if I could answer those questions, it's not. I'm not telling you. Sorry, I'm not telling you because I don't want to. I'm not telling you because I've got no idea. No one knows what the next move is. If everyone knew what the next move is, or there was a way to find it, it would be completely priced out of the market. It just wouldn't work. Or if I had a proprietary way and didn't tell anyone, then I wouldn't be here. You would never see me again. I would just disappear. Long-term trend lines and parallels work for me. Yeah, I don't not use them because they don't work. It's more just it's just not in my strategy. It's just not a part of the way I trade. Again, I do draw them up when they're really obvious or there's a higher time frame one there, but I'm not going to buy or sell because of a trend line. Any stocks you're looking at? No. Ray Beach, you should know me a bit better than that, my friend. I don't do stocks. I invest in index funds, and that's about it. In fact, that is it. Is it time to buy the Nasdaq now? I wouldn't say so, actually. Yeah, so Nasdaq is back with the bearish reading on the edge finder. It's got -6. You can see in the past 24 hours, it's lost 3 points of its score. And I'm fairly sure the technicals aren't great. Yeah, I mean, look at this. So what I'm actually looking to do on the Nasdaq is find some sort of low. Now, I may or may not actually already be in a position on the Nasdaq. No, in seriousness, I do have a short position, but again, it's very, very small. It's similar to what I'm doing with gold. So I've just added in one tiny reference point of a position on the short side of Nasdaq, roughly around this area. I can't remember exactly where it was, somewhere around here. Just to maybe start a DCA short position if it does arise. If not, fine, I'll take maybe a $100 loss, not a huge deal, really. Now, what I do want to do here is see the edge finder maintain its bearish score, take the fib from the high that we've already got printed to wherever the low may be. So let's say here, for example, then a pullback into the fib zone, so around here. Then I can look for a short position with stop loss, take profit, so on and so on. So it would look something, again, this is, as I said yesterday, this is just a hypothetical low. It's more just to visualize it. It doesn't mean that that's where I think the low will be printed. But yeah, it would be something like this. So just waiting for a low to get printed, then the pullback, and that's when I can then execute into a short position. But yeah, I wouldn't want to go long. I think, actually, I don't know why I'm saying I think. Let's just check. I know COT is significantly bearish on the Nasdaq, but I'm just not sure by how much. I think is it the most short they've ever been, or is it just in terms of a very extreme short? So short positions were 53K. In 2025, they're currently, wow, it's double actually. That's 109K. Okay, yeah, that's actually very significant. You can see net change here on week basis is quite significant as well. So not last week, the week before, it was negative 5.63% net change. Then last week was negative 6.85. So yeah, they are massively reducing exposure there. So yeah, as I said, I wouldn't want to be on the wrong side of that. I would definitely be looking more towards the short side. Shane, I've got no idea what that message means. Okay, what's going on here? Thoughts on pound New Zealand? Yeah, I think I was looking to be a buyer of pound New Zealand actually, but I've kind of forgotten about that here. Yeah, so this is what I was looking for. Actually, it seems to be doing quite well actually so far. But I'm not in this position, full transparency, unfortunately. This was just, I think we were looking at this last week or the week before. So actually, I'll show you on the daily. That's where I think we drew it. So we've got here, daily low to daily high. The market has pulled back into this fib zone, and we are seeing respect of the sort of support level we've got through here. Technically speaking, this trend is bullish, although not massively so. It's kind of side by side in the moving averages at the moment. So with that said, I would say the technicals do look quite nice, but I'm not sure about the fundamental side. Yeah, it seems to have, oh no, sorry, it's not dropped off actually. It's still very bullish with a score of 8. So actually, this might be a good opportunity to be a buyer. Now, the stop loss is far too big down here. I wouldn't want that type of stop. So I would have to reduce it down to this previous daily low here. Take profit wise, I think actually I would be just quite happy to take profits at these previous highs. Now, very likely I'll actually just not have a take profit, but I will set an alert at these highs, maybe to trail stops a bit further, or maybe take some partials. I don't really do partials, but again, we'll see when the time comes. Daily overall is very bullish as well. So yeah, I think actually pound New Zealand could be the next play. So I need to keep an eye. Actually, you know what I'm going to do? I know I keep swapping windows, and that might be a bit annoying to watch. So I do apologize, but I'm working with one monitor. I'm just going to set an alert here just to remind myself to get in later. I'm just going to set one above and below just so I don't miss one. There we go. What do I need for you to teach me fundamental analysis? You need $5,500, and then you can get into my mentorship. Otherwise, there's lots of free content. You can go to the A1 Trading website. They've got free content on sort of macro. I think Trader Nick's actually got a free course as well on his YouTube channel. I cover macros. There's lots of places you can do it for free. But yeah, if you want me to teach you it, then it's going to cost you some money, because it takes my time. Time is money. Took some profits already. Oh, right, Mega. I assume you're talking about gold there. Oh, yeah, short gold again. Very nice, Mega. I'm glad you made some money there. What do you think about rate cut from the Fed? No, I do not think that is a likely outcome here at all. So if we look at the heat maps, yeah, I mean, what here? what could possibly warrant a rate hike by the Fed here? Nothing. There isn't a single thing that makes me even wobble on that idea. Growth is down. Services PMI is down. Retail sales are down. PPI is down. We've got wage growth that's down. Jobless claims slightly okay. Well, sorry, not slightly okay. Actually, not a huge miss, but still down. Jolts, not great. ADP, not great. NFP, pretty large, significant miss there as well. So no, I just do not see a world where the Fed can justify a rate hike at the moment. Oh, just want to quick, sorry, I completely forgot about that. Net options volume. I'm not even, does the Edge Finder have options volume? I've got no idea. If the Edge Finder doesn't have it, then I'm not too sure. I don't do options. I know they've got some options data, but I don't even know where to find it. Hold on. Crowd sentiment, net options volume. There we go. Just hold on. Let it load. Gold. There you go. So I'll leave that on the screen for a second while I have a drink. Also, excuse my beard. I do need to have a shave. Okay, so there you go. That is gold options volume for you. Also remember what the Treasury does and what the Fed does different. Yes, absolutely. Hey, James, Nikkei 225 short. Okay. I'm fairly sure it is on the Edge Finder, actually, with the bearish reading. Yeah, it is down here. It's got -6. So fundamentally speaking, it seems okay. Let's take a look at the market though. Nikkei here. Actually, you know what's interesting? This isn't perfect, but we did have almost, well, in this case, I will allow it because, we saw 3 rejections above the 61.8 and very quickly closed back below. So I'm okay with that. Now, I actually wouldn't mind going in for a short. This would be very aggressive, so don't do this, but I'm sort of thinking out loud here. Something like this, I actually do think might be worth an attempt, just because, we created a lower high. The fundamentals are bearish. The daily trend is still bullish. That is something to keep in mind. However, the H4 looks like it might be crossing again. So yeah, I think this does look quite attractive. Now, it's tricky because I do really like the Nikkei, but yeah, I could imagine it coming lower. And when I say that, I mean based on this. So if we look at the Bollinger Bands on the weekly time frame of the Nikkei, it's extremely overbought. So you can see typically when a market does get above its Bollinger Band or below, we do often see a mean reversion. Not every time, it depends on the market, so on and so on. But we can see with the Nikkei, this does happen. So we come down to 200 weekly moving average when we could become overbought. We've been overbought since basically the start of this year, roughly, maybe even last year. We've had no significant pullback. So this could be maybe a time we could start looking for that. Now, again, this is a weekly time frame. That is a large move. So I'm not going to say that is 100% going to happen by any means. But again, it's something to keep in mind. I think it's quite interesting. Oh, what's happened here? There we go. Okay. AI can teach you. Yeah, that is also a good point. AI is quite good at explaining fundamentals and stuff. Have I checked the Dow? No, I've not looked at the Dow yet. We can take a look in a minute, though. We've still got half an hour, so don't worry. We've got lots of time to go through things. What do you think about the... Oh, wait, hold on. What do you think about cut rate from the Fed? No, I also don't think they're going to cut rates. I think just because the data is poor, it doesn't mean they can cut, because while I don't see any room for them to hike rates, I also think they need to be very, very careful with the rate cut idea. So there's a few other reasons, but I think mainly it's very much a case of oil prices. We are still seeing oil prices going to the upside. It doesn't seem like there's really an end to this Strait of Hormuz or Iran situation in sight at the moment. So I think cutting rates while we've still got the quite high possibility of higher inflation in the future, I think that'll be a bad move. James, can you please talk about how you plan your risk management? Okay, I'll tell you what, I'll do that and then we'll move to the Dow, because it's super simple. As long as you can use a bit of common sense, this whole approach is really simple, but it's really effective. Hold on. Where is the text tool? Sorry, I'm a bit of a boomer. There we go. Okay. So what's going on? It's not my day. Sorry, guys. I'm trying my best here. There we go. Okay. So, right. There we go. So you've got risk. Let's say you've got individual, let's just say currency, just to keep it simple. So in this way, this is like the most surface level way, and it's more just a way to manage your exposure, really. So let's say you were in dollar CAD long. So this means you are +1 on the dollar because you're long dollar. You're then -1 on the Canadian dollar because you're short on the Canadian dollar. Okay, super simple. Then let's say you are in a pound US dollar, let's say short position. So you're now +1 on the pound and you are now -2 on the dollar because you're short on the dollar. Sorry, you're long on the dollar. Actually, sorry, let me change that to +2. I got a bit confused there. So this way, because you're buying the dollar here and you're buying the dollar here, your exposure is now +2. So let's say this is equivalent of 2%. So every one is, a percentage. So obviously, if you use 0.25, you could use 0.25, whatever it is. It doesn't matter too much. So this is, again, very basic exposure tracking. Then you've got themes. So you've got things like, hold on. There we go. So this one is a little bit more important, I would say, or not necessarily more important, but just as important. So let's say, what would we say? I don't know. Let's say Fed rate hike, just for, again, argument's sake. Okay, so we've got Fed rate hike. How much do you want to risk on this whole idea? So let's say, you've got an idea that the Fed's going to hike rates. How many attempts are you going to take to try and get into that type of move? So let's say your max budget for this whole idea is 3%. Okay, so then based on this risk theme or this theme individually, you might be in these positions. So you're buying the dollar, again, buying the dollar here, buying the dollar here. But because your max risk on this theme is 3%, you actually have room for one more dollar long position. Does that make sense? Again, this is super simple, but I'm not sure if I'm wording this correctly. Now, just because you've got a 3% budget, it doesn't mean you have 3% risk open at one time. It can mean you spread out that 3% risk. You can have other themes. So you could also have something like, I don't know, Bank of Japan or ECB or Iran and Strait of Hormuz. It could be anything. It's just a theme that's moving the markets, a narrative. And you assign a certain amount of risk. So if it's a really kind of flimsy idea, I think oil might go higher because the Strait of Hormuz is still closed, the negotiations, blah, blah, but it could change over the weekend. That's a bit of a flimsy idea. So you might risk, 1% on the whole trade. So then risk 2 positions at 0.5%. Does that make sense? Again, super, super simple, but hopefully I've explained that properly. That's how I do it. You can go down rabbit holes of risk models and all that type of thing. I don't do that. I try to keep my trading as simple as possible, and that is what has worked for me. So yeah. Okay, so the Dow. The Dow is what we will do next. Okay. Dow here. Let's just reset the chart. Do we have anything on the edge finder for the Dow? It doesn't seem like we do. There's no bearish reading for the Dow. There's no bullish reading for the Dow. So I'm going to go into it relatively neutral. However, the fact that we've got the Nikkei, the DAX, and the Nasdaq, where's the Nasdaq gone? Here. We've got 3 bearish readings for sort of the risk assets or indexes. So I wouldn't mind going in with sort of a default short to neutral idea. Now, because the edge finder doesn't have a reading, that's why we've got sort of the neutral idea, but then we're sort of using the other markets as a bit more of a lean for the bearish idea. So I wouldn't want to go into position yet. Again, I would need to see the edge finder flip to a bearish reading for the Dow. So this is more just a planning stage. But how would we potentially get in? So on the H4 here, I would need to see these moving averages break. So I need to see the market close below the moving averages, potentially a retest into this level, used it as a bit of support here, previous resistance here. So break and retest type of idea, then continuation lower. That's basically the whole idea I've got at the moment. Of course, I'm thinking on the spot, so there might be something a bit different that I'm not seeing at the moment. So in that case, we need the fib from the high, and I would need to, actually, I quite like this idea. So in this case, fib from the high, if we ended up seeing this market continue lower to this previous level of support, that means the fib zone, so the 50% to 61.8% would line up with the level we just spoke about right here. So we could see a bounce off this, 50% retracement, roughly, give or take, so fib retracement, then a continuation lower from there. That's also another option. So I think that it's worth keeping both in mind for different time horizons. But yeah, I think short side maybe a little bit more favorable. But again, I need to see the edge finder confirm that. That's just it's a loose idea at the moment. Trump spoke, that's why. Trump spoke when? GPNZD treats me the same way. USDJPY treats James. Oh, Christian, I'm glad you know the law behind that. Yeah. Well, I'm hoping me and the yen can become friends. You know, I'm in a position that's doing okay, so maybe we can make up for our differences. Thanks, mate. No problem at all. I'm going to assume that might be Indian, but I'm not sure. I don't know what that says. Macro, can we analyze the 10-year yield chart using technical analysis you taught earlier? I mean, you can, but it's really not driven by yields. So this is where technicals become a little bit disconnected. It's more a case of we can analyze anything with technical analysis really, but yields just really aren't that relevant with technicals. It's more a case of the yield direction and what's driving the yields. So with, stocks, currencies, things like that, we can draw, weekly levels of support and we can expect buyers and sellers to come in from those levels, but yields are a little bit different. Anyway, I'm yapping. So let's have a look and see what we find here. So do you say 10 or 30 year? Was it 10? Yeah, 10. So in this case, you would kind of just mimic, very, very typical what we've been doing with other markets. I'll be honest, I don't see anything at all. We are kind of moving to the upside. So, if we really wanted to, we could take a fib from the low to the high here, maybe some sort of retracement back to 50% and then continuation higher. That's kind of all I've got for you. And then we could maybe account for the previous high over here. But yeah, I'll be honest, I wouldn't put much weight on this at all. So sorry to disappoint, but I just don't think it's really worth doing. Jeremy says he's entered shorts today. Shorts on what, Jeremy? Oh, do you mean the Dow? I would assume you mean the Dow or the Nasdaq, one of those ones. One thing I have to say here, that Fed target is still inflation from last meeting. We might still see surprise hike because oil prices elevated cause inflation. Yeah, that's kind of what I was saying, but I don't think we would get a hike in the next meeting. I think the Fed would need to see evidence first. So I think they would need to see the inflation prints actually come out higher rather than trying to predict it and rate hiking prior to an inflation print. I think that might be a little bit of just a bit too an aggressive an approach for the Fed. It was tempting to sell all of my GDXW yesterday. I've got no idea what that is. Read what I said about the Dow. Okay, what did Mega say about the Dow? I'm not sure what you said about the Dow, Mega. Oh, wait, hold on. Was that? Look at the Dow, put a parallel using COVID high and low. Okay, let's take a quick look at that then. So the Dow, we'll go to the daily and we'll do what Mega said. A parallel from, what was it, COVID to, the COVID high to low, right? When was COVID? That was here. A parallel is, where we got parallels at? Is it in the box here? No? Where are the parallels? I really need to learn where all these things in are. Parallel channel here from high to the low. I'm going to guess that's not what you meant for me to do. Either way, whatever. I'm sure I'm not going to do it because I'm not going to waste time trying to figure it out. But either way, I'm sure there is something there, Mega. I'll trust you on that one. Your thoughts on Aussie yen? We did already cover Aussie yen. Do something. Basically, I don't see anything to do other than be a buyer. And that's not financial advice, and that's not a sign to buy it right now. But my argument is that nothing's changed. We had the interventions. Who cares? It's just an opportunity to buy lower. Of course, you kind of missed that now. But yeah, I really just don't see anything else. It's very, very boring. Just look to be a buyer. We do have Aussie yen. There you go. It's bullish as well. So we've got the edge finder that aligns. We've got the rates that align. So yeah, it's all cool. Crypto. Oh wait, hold on. Hi James. Is it true NZD correlate with stocks? Well, stocks and Aussie correlate with gold. That's not really how it works. No. So you've got to look at what the countries are driven from. How do they actually make money? So, for example, Australia is quite largely driven not just by China, but also by things like iron ore. So, currencies are driven by stocks somewhat. So, for example, if I don't know, Well, no, I suppose actually they're not really, because they're driven off similar things. So a big risk off event, yes, would move the stock market and in turn move the currency. It doesn't mean they are correlated. It means they're reacting off the same thing. So that makes sense. Hopefully that clears up the question. But yeah, I think in terms of correlation, it's really, you can actually just ask ChatGPT. It's not a complex dynamic, but every economy, well, most economies have something that they're driven from. So for example, Canada largely is made, not entirely, but largely made up with oil prices. Australia, again, largely driven by what's going on in China and iron ore. And I think a few other, what they call it, metals or minerals, whatever the right terminology is there, but you get it. Draw the parallel. You guys can do it if he doesn't. Yeah, I'm not very good with drawings. I know how to draw a fib. I know how to draw a trend line. I mean, I even struggle to draw a text box. So that should give you the extent of my technical abilities there. Oh, Jeremy, you went short on the Nikkei. Very nice. I like it. Will the bond buyback that they announced yesterday affect the rate decision? No, I wouldn't say so. I think, sorry, they've got dogs over here making noises. I'm not sure if you can hear it. Okay, so when it comes to the yields, let me add these back on. Oops. What we often see is when, also let me get rid of that fib. When we see yields rising, typically that is a sign, not every time, there's some other reasons that yields can rise, but in this case, we'll talk about this. It's because the markets are wanting hikes, essentially, to keep it super simple. So because of what they did, yields have actually come down. So it could be a case of actually buying a little bit of time because they don't want yields rallying and they're not hiking rates. It's not a great position to be in. So it could be a case of they did what they did to slow down the yield rising, but also a case actually, and I'm not sure if this was intentional or not, because again, I'm away, so I'm not keeping up with the markets as closely as I normally do. But what they did also makes it more favorable for traders and investors to buy the Swiss and the yen as opposed to the dollar. So it could have been a case of, again, whether it was intentional or not, I don't know. But because the MWF intervened on the yen, then the Fed also intervened. And we very quickly saw these markets returning back. They did what they did and made it, again, more attractive for people to be buying yen rather than selling it. So that could also be another angle. But again, that's not what you asked, so I won't go into that too deeply. Wow. It started to rain. This is the first time it's rained in London. I'm not sure about the rest of the UK, but it's the first time it's rained in London in like 35 days, I think. We're actually in a drought, so this is cool. Now I can use my hose pipe again. Anyway, USD shorts would be a good idea once New York starts. Potentially, yeah, maybe. Mega, I appreciate you trying to help me, my friend. I do appreciate it, but I'm not going to do it just because I don't want to waste time doing it. I've only got 10 minutes left. James, can you check the weekly trend line on what, Cedric? Do you mean on the dollar or what? Buy gold? Yeah, I would say gold is still a great buy. My screen's looking weird. Yeah, it's because we've got a mirror going on. So don't worry. I don't keep it like this forever. It's just while I read the chat. Normally I have another monitor where I read chat and then, so you don't see it. But again, I'm on one monitor today. That's all I can do. Marco, I take significant loss when buying gold because swap rates are very high. When I sell gold, I can actually make money from the swap. Have you ever taken these swap ratios into account? Yeah, I look at swaps, but not really with gold because gold's not a yielding asset. So it's just not, with gold, it's just not something I really care much about. With, dollar yen, for example, that is a big part of the trade. One reason why I'm hesitant selling pound Swiss is not just because of the fundamentals, but it's also because the swap rate is quite expensive for short sellers. So yeah, it's absolutely worthwhile paying attention to, but you also need to know when to pick your battles. I was in London this year until February. Didn't rain much. Yeah, no, it's been rough. I mean, I live in what's called the most green borough in London. So essentially, it's got the most parks and green areas and grass and that type of thing. It's all dead. It's just there is not a single bit of normal healthy grass here. It's crazy. I've never seen anything like it. It's like living in New Mexico, or what I imagine New Mexico is like as a Brit. Okay, right. So we've got 10 minutes left, give or take. Let me just take a quick drink, and then we'll finish off the segment. Can we check the weekly trend line on the DXY here? Absolutely, we can do that, Cedric, my friend. So I've been calling you Cedric. You've changed your name, but I think you're still the same person, so I'll keep calling you Cedric if that's all right. Okay, so weekly trend line on the dollar is still completely intact. However, it might not be for long. The dollar is heading down with some gusto at the moment. So I think really the question is, well, I'd say, the rain stopped. That was short-lived. We've got two questions here. Either we end up breaking this trend line, which I really wouldn't want to see, to be honest. I'm quite optimistic on the US. I really would like to see a rejection. However, that's one thing. The other thing, though, is are we actually just going to end up back in this sort of range on the dollar? You know, we were stuck in this range for a year. I know it looks small on here, but it's a weekly time frame. It's a year-long period where we just couldn't really do much. You get short-term trades for sure, but generally speaking, there was just nothing going on here. That would, in my personal opinion, be the worst case. I would rather we end up breaking out lower, just because I just don't like ranging markets. There's nothing to do. But yeah, in terms of the technicals, there's really not much. So we're kind of trapped either in this sort of trend here, or if we end up breaking out, is then a case of, are we then looking at this trend line coming into play on the weekly? We end up creating a lower high, and we end up in a much larger, longer term range like this. So I would say the dollar's technicals are actually super, super unclear at the moment. And then again, we align the idea that we've got rate hikes getting priced out, yields are cooling off a little bit, the dollar's fundamentals are weak. So yeah, it's just really not looking good. Optimistic on the US? Yeah, I am optimistic on the US. So when I say optimistic, it's not a case of I think the dollar is going to, 110, 120, 130 or anything like that. And it's also not a case of I think the S&P is going to skyrocket tomorrow. When I say optimistic, I mean long term. The US is still a major player in tech, AI, and those things. It's still a world reserve currency. I've got no reason to not bet on the US. However, and the big however is, I do still expect some sort of crash at some point. That's very easy to say, of course, but with everything that's going on with AI, valuations, so on and so on, everything I've said before, I am very cautious that we could see a short-term significant move to the downside. Now, something else I saw actually on the S&P, I've not checked this for myself, so I'm going to check it with you, but actually, let me just pull it up before I start talking. I think it was 12-month here. Yeah, so how long is this? 1, 2, 1, 2, 3, 1, 2, 1, 2, 3. Yeah, so actually historically, and again, this is only since 2008, I've not got a super long-term chart here, but we normally expect 2 to 3 years, and then we either have a flat year or a bearish year. At the moment, we're on our 1, 2, 3, 4th year of just nonstop upside, really. Obviously, we had a bit of a turn down here in 2025. Obviously, it's just a wick, though. So again, just from this, statistically speaking, it looks like we could be in for maybe next year as a bearish year, or maybe even this year flipping super bearish. I don't know. And again, I'm not trying to forecast that. It was just something I saw on Twitter, so I wanted to take a look at with you. But yeah, again, I do expect something to crack at some point. But when that will be, I don't know. It's not my job to forecast that. My job is to jump in when it happens. How do you manage risk stop loss if the... Oh, is there... but what if Black Swan? Well, in those cases, if there's a Black Swan event, there's, what can I do? That's a case of, okay, well, if there's a Black Swan, this is where you are benefited from being hedged. It's where you're benefited from managing your risk, and it's something you should always think about. So when you're trading, you need to understand and think about what is the worst possible outcome. So, if you're, let's say gold is super bullish like it is right now, and you're piling in long positions, and right now everything's good. You're maybe in, I don't know, let's say 2, 3, 4, 5, 10% profit. Fantastic. But what is the worst case scenario? Just because you're in profit now, it doesn't mean that, it doesn't mean it's going to last forever. So in that case, yeah, again, you've got to think, what is my current open risk, and what happens if everything goes wrong and all the stops are hit? What is the maximum I can lose? And that's really all you can do, because again, a black swan event is black swan for a reason. It doesn't mean it's going to happen. It's more a case of, okay, well, likely it will happen at some point, but it could be next year. It could be in 5 years' time. It could be in the next 10 years. So eventually you are going to be in that situation, but most of the time you're not. But you still need to plan and think about it. The dollar milkshake theory, I've got no idea what that means, Mega. Will I stream again? I've learned a lot from you. Thank you very much. I'm glad to hear that. Yeah, I stream. I'm on these streams every day for 1 hour, 11 a.m. UK. 12 p.m. to 1 p.m. I think UK. So yeah, I'm on every day, other than the days I take off, which is quite rare. Yeah, Bola, I'm not. Yeah, when I say I'm optimistic, it doesn't mean, again, as I said, it doesn't mean I'm optimistic regardless of anything. As I said, I do expect some downside, but overall, I'm still optimistic long term. Vance criticized the dollar. Yeah, I did hear about that. You always keep up the stream schedule? Yes, the stream schedule, actually, let's take a quick look. You can always see on there who's coming on and what times. So you can see I'm on pretty much, actually, it's only the current week that's listed. But oh, wait, you can see it here. So I'm on every day of pretty much every week. Then after me, we've got Alan. Marco is before me. Then he's got Nick, then Marco, Alan, and Marco again. And then Tiger. Yeah, every day you can see who's on. The Nikkei did not touch its 200-day in over a year. The fundamentals are strong enough to maybe do it now. Absolutely. Yeah, possible. What CFD broker do I use? I use Interactive Brokers. I use Darwin, and I'm actually just in the process of going back to IG for a spread betting account. So I don't really trade CFDs. I trade CFDs with Interactive Brokers and also on Darwin. But yeah, that's it. And then again, the others are either futures or spread betting. But it's good to see you, Kurumi. Okay, I've got 4 minutes. Gold break new high NY session today. Break 4,600 for sure. I'm not sure what gold is right now. What's the current price of gold? Yeah. So gold's 4,460 close to 4,500. 4,600. Yeah, 4,600 could absolutely happen today. I wouldn't expect it. In terms of, it wouldn't be my base case. I'd say 4,500 possibly is sort of the obviously the closest one. 4,400, 4,500, 4,600 again, absolutely could happen, but I'm not gonna trade off that. Personal fund or prop firm, a little bit of both. So obviously I've got private or personal money with Interactive Brokers and IG, and then obviously it's, I guess you could call it prop money with Darwin. I mean, it's not really a prop firm, but it's not my money, so we'll call it prop money. How does spread betting work? It's basically tax-free in the UK. So spread betting is viewed as gambling by the UK government and HMRC. So your gains are not taxed, but the problem is you can't offset any losses. So if you lose money on another asset, you can't write it off with your spread betting losses or wins or whatever. However, the caveat is it cannot be, or it's not tax free if it's your main income. So if you're making, I don't know, say £10,000 a month off spread betting, then it is your income. So you're then taxed income tax, not capital gains tax on it. I'm not a tax advisor, by the way. So if you are in the UK, do your own research, get your accountant and things. That's just from what I understand. Jet Coco, yeah, spread betting is gambling. Yeah, that's how it's viewed. Jet Coco is going to 12K, is it? So you think Coco is going to double in value? What's your time horizon there? To be fair, actually, yeah, it seems actually it's lost a significant amount of value here. It's down, peaked at 80%. Currently down, yeah, just over 55% or 56%. Maybe. I don't know anything about Coco. I have not the slightest idea. However, based on a chart, yeah, maybe it could be a pretty good long here. We've got the daily that's flipped bullish. Absolutely. Look at that ball out's putting us on some sauce. Oh, the El Nino. Yeah, you are right. I didn't even consider that. Anyway, ladies and gentlemen, it is my time to wrap up my segment anyway. The stream is still ongoing, so don't go anywhere. We've got Alan coming to take over the show after me. Guys, stay safe. Don't get margin called. I'll see you all tomorrow. Thank you for being here. And yeah, stay safe. I'll see you later.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is 8cap. 8cap is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in the live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. 8cap has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out 8cap if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style as well as your own risk tolerances. Thanks to 8cap for sponsoring today's content. Now back to the show.
Good morning, A1 Trading. Hope you guys are having a great morning, great start to your day today. Mega danger. Oh, no time to leave. Why, man? You got to stick around. This is the time to hang out, man. Markets are heating up here. We had a crazy big day yesterday. So I'll share my thoughts and how I look to position myself moving forward. We all know it was bearish for dollar, bullish for gold. Risk on for sure. Even Bitcoin woke up a little bit and it's up another 3.7% today, which is crazy. So very happy that I did not take that short on Bitcoin at the 200-day moving average. It's really starting to wake up here, which is interesting because it's very sensitive, I guess, to yields. We know it's sensitive to Japan's bond yields, but US as well. So it's definitely performing like a risk asset, right? Lower yields, risk assets do better. Bitcoin is doing better here today. So that is interesting. Glad I did not short. Maybe I look for 80K to short at this level of resistance. That might be worth doing, but we'll see. We'll see. It depends how much follow through there is to this story as well. In fact, something interesting that I saw online, which was referring to or regarding what the Treasury said, but the upping from 2 to 4 billion was kind of like their baseline and that they were looking to give out more information later. So to me, that kind of implies like if this was not working, if what they did yesterday didn't work or it's not working to tame bond yields enough, then maybe perhaps they're willing to increase their buybacks and thus, pressuring yields even further. So it seems like they kind of kept that in their back pocket, kind of like, hey, look out for that. So that's why I think that there is some potential follow through when it comes to this story here. And so I continue to be dollar bearish. DXY popped and broke some very key resistance or support, I would say, right around here, that 200-day moving average. And we haven't really pulled back into that yet. So I'll be looking for that. But we did have this solid level of support, the 200-day moving average. That was the level that I really, really wanted to see. And we did break right below that yesterday. So for me, I want to continue positioning myself short euro dollar. So yesterday I had euro dollar long, I had USD CHF short, and then I had gold long. All of those three I got taken out besides USD CHF. So that one's still running. I did take it out on my live accounts, but on the prop account, it is still running. But when it comes to DXY and repositioning myself, I want to see a test of that 200-day moving average, see if it holds nicely, and then we continue lower. So I have some key levels that I'm looking at here. So with the euro dollar, this is the level here. In fact, I'll go to the FTMO chart so you can see exactly where my limit orders are at in case you guys want to, if you guys are curious. So with the euro dollar, we had this breakout here of resistance. That resistance level also had the 200-day moving average right there with it. So basically that DXY chart, but inversed. So I'm going to do this. I'm going to turn this level of resistance into support. And what I'm looking for here is a pullback into this level, into this 200-day moving average. If it holds nicely, then I have a buy limit order and I take it higher and I target 1.18. And then I have my stop loss right over here at 1.156. So that's kind of my position there with euro dollar. With USD CHF, this is what I'm looking at. So I have my stop trailed here, right around there. But what I'm looking for here for my live account is we get the pullback into this level, we hold up nicely, and then I continue and re-enter to the downside once again. And then for gold, I'm sure you guys are very looking or very curious about what I'm thinking about for gold. This is what I'm looking for gold. So we are actually getting a pullback right now. So we had a little bit of a pop above the 200, you could say. But then we are testing back into this previous level of resistance turn support. So I do like this a lot. If we do tap into this level and it does hold quite nicely, you best believe that I am going long on gold, and then I'll put my stop. I'll put my stop right around here and then continue trailing higher and higher and higher. If this level does not hold well, then the next level that I'm looking at would be right around here, 4325. So in fact, let me go ahead and remove this one real quick. I'm going to remove this one here. So the next level that I would be looking at would be somewhere at right here, 4325. And this level held up quite nicely before. So I'm going to actually extend the width of this level here, just like so. That's what it will look like. So let's measure this out with a fib too, just so I can see. So from here to here, perfect. So that 432 level, right, lines up right there with the 38.2% retracement level on the key fib. And then right around here, if we just measure this leg out, what does that look like? Well, this level here is also the 38.2. So this is like the aggressive kind of take a quick stab at it approach, which is this level 4455, you could say, right around here. This is the quick take an attempt to see if we have buyer step in immediately. And if that one doesn't work out, then this level 4320 looks quite well for me. So just so you guys know, I'm very, very open-minded and am accepting that this first attempt is likely going to get stopped out. Okay, so keep that in mind, guys. We're not risking the entire farm on this one. Again, we want to take a stab at it to the long side. If it doesn't work out, fine. We take a better approach right over here. So that's my thought process with gold. But we are getting some pullbacks. We'll see how aggressive this chart is to the upside. How shallow these dips are. All right, let me go ahead and see what's going on with the chat with you guys. Let's see. Good morning, Kier. Good morning, Dennis. Hope you guys are doing well. Good morning, Ball Out. Hope you guys are doing awesome. Hey, Huang. Let's see. What pairs are you interested in? I am interested in Euro dollar long and dollar Swiss short. Your levels are aligned with mine. You're using Bollinger Bands. Awesome, man. Yeah, just some pretty simple levels, right? Nothing too crazy, nothing too fancy. It's literally support, resistance, right? The most basic thing you could do. And it works well for me. And this chart here, gold is respecting those levels quite nicely as well. So that's what I like to see. But this level right here, this will support once, twice, 3 times. So I would imagine that if you were to revisit this level, it could hold quite nicely as well. What's my view on the Nasdaq? With the Nasdaq, it's I don't know, man. It's not really performing like I thought it would, right? We would imagine that the Nasdaq and the S&P would have a similar reaction to what Bitcoin did, right? Bitcoin, acting like a risk asset today. When you had yields lower, you would imagine that the Nasdaq follows up with that and shoots higher there, but it's not doing that. So to me, that's just showing some weakness there. So that makes me hesitate. And here's what I would say. We've had some episodes with the Nasdaq. So for example, this right here, this to me was not the dip, right? And so when we don't have the dip, it makes me question and it makes me kind of hesitate on accumulating equity exposure at these highs without seeing that big dip. So for me, I want to be more patient on it. It just means you stay away. You have lots of other things happening right now. I think gold is just the obvious trade right now. It's kind of one of those trades where it will win in a lot of the scenarios. So out of like 5 out of 5 scenarios, it really wins out of 4 out of 5, right? The only time or the only kind of scenario where I see gold really not working out is if you have a resurgence in yields, mostly due to the war in the Middle East. You have troops on the ground, that sort of stuff. But in a lot of the scenarios, gold ends up coming out a winner, one way or another. So I think just the obvious trade right now is with the metals. So I think maybe you're seeing some kind of a rotation out of equities, right? Especially as you're seeing, up until yesterday, you're seeing the long end of the curve at multi-decade highs. That's scary, of course. So you're probably seeing a repivot out of equities going into more cash or more, metals. So to me, I'm like, if this is not the most appetizing trade to me, then there's no reason to, pay too much attention to it. Am I still going to look at it? Of course, in case something changes. But again, I'm not going to force myself to marry this asset if it's not working out. Similar to currencies, right? Currencies up until yesterday were kind of like doing whatever, besides, of course, the yen. But with currencies, it was kind of getting boring a little bit, right? Until yesterday, where things start to heat up. So that's kind of my take on that. Yeah, impressive divergence from Bitcoin for sure. Yeah, Bitcoin is acting more like a risk asset than the equities market for sure. I mean, this is quite well. What is this? We had a big day yesterday, and today so it's up 12%, pretty much 12% in 2 days. So it's starting to wake up there. Shout out to the crypto bros out there. I'm sure they're having a great week today. Sorry, that was loud. They're having a great week today. Probably celebrating. We'll see. I think I'm curious to see what happens here though. Right around here. So if price does get up there, are we breaking out and continuing higher, or are we continuing the range? That's like the big question, because Bitcoin has been in a funk. So I'm curious to see what it would take for it to get out of its funk. So yeah, that's what I'm looking for there. Man, yields are picking back up. That's the reason why metals equities are falling now. That is true. The yields are up today, 1.3%, basically reverting more than half of yesterday's move. So this was yesterday here, right here. And yields are basically, well, I mean, this candle has swallowed more than half of yesterday's candle. So we'll see. We'll see. What do you guys think? I'm curious your thoughts. Do you think that yesterday's move or yesterday's announcement was the start of something bigger, or was it not enough for it to have enough follow through? So type 1 if you think there's going to be follow through in the development of the US yield story going lower, and type 2 if it's not going to work out and you're going to continue to see elevated yields. Let me know. 1 or 2. 1, yields lower. 2, yields higher. Nikkei has been under pressure. Did have a rally yesterday, didn't it? No, it didn't. It's flat. Jeremy says yields higher. Lunar says 2. Blackest Day says 2. To me, it would be a warning sign if yields don't fall further. If yields stay stubborn and they call bluff, right? They call bluff on this, then yeah, that would be concerning. The market is pricing in risk. They want more premium for holding US debt. That wouldn't be good. That wouldn't be fun. Right? The US is trying to tame this yield, so they pay less interest on our debt. This is if this continues going higher, this is a negative feedback loop for the Treasury, for the US debt story. It's a negative feedback loop. Chris Pover literally called to the dot that the markets will test when Wars took office. The markets always test the new Fed. It is like a historical thing. I don't have the stat off the top of my head, but out of X amount of new Fed chairs, like the majority of them experience drawdown, not significant, but some meaningful drawdown before you're up. that happened with Powell, right? So definitely not out of the question. We'll see. But yeah, this right here was not a pullback. Okay, this was not a pullback. There is a lot of leverage right now in the financial markets, in the US equity markets too, especially when you are considering hyperscalers and stuff like that. Like a lot of these a lot of the debt that's associated with these hyperscalers and stuff like that, it's not really showing on the books because they're doing it as like these leases that don't show up yet. So there's definitely lots of leverage here that hasn't been unwinded. And so what's happening is when you have a slower drift in equities, right? We all know that there's leverage in the system. And when you grind slowly higher, it's kind of like, you know what's happening, right? But you don't know when, but when it does happen, it's going to be pretty big. And you're just deferring the outcome. And the more you defer the outcome and the more leverage is just slowly adding on to this, the bigger the fall. Still planning to short Bitcoin? Honestly, not really, man. Bitcoin is really acting like a risk asset. And so if this story of the bond yields going lower has some follow through, I really don't see a world where I would be short Bitcoin. If anything, I would probably long it. So I'm going to be a flip flopper in Bitcoin. I haven't committed to any position, so that's easy for me to say that. But I was planning on shorting Bitcoin at the 200-day moving average, but it's responding really well to the yield story going lower. So I really wouldn't short Bitcoin anymore. It just doesn't make sense. Thoughts on pound Kiwi longs? Let's look at pound Kiwi. Let's see. I'm going to delete these zones here, make it just cleaner for me. Let's see, what is pound Kiwi doing? I mean, it looks like it's a solid level. Let's see what the Edgefinder is saying, though. Let's put on miners. Pound Kiwi, we're already very bullish of 8. Looks like a good trade, honestly. Yeah, especially if, not financial advice. Buy somewhere relatively low, stop below structure. You target 231, and then you can target anything above that. If you break this level 232, you could target 235. Yeah, looks good. Edgefinder's bullish. I'm just not super interested in trading miners right now, to be honest with you. Like if I'm going to allocate capital anywhere, it's going to be in the metals, right? So like I give myself an allowance, right, of how much risk I can have outstanding at any given time. So if I'm investing or putting money in pound Kiwi, that means that I have less to deploy in gold when the time is right. So the question would be, was the pound Kiwi trade strong enough, just like gold, to where it makes sense to justify me putting money there? Probably not. Like for me, like the gold trade is one that I want to be active in, right? So for me, I'm just going to reserve that for gold when the time is right, and I'm going to thank myself later. Hope that makes sense. I think the market is preparing for a big risk off event with Iran risk over the weekend. Look, oil today. Yeah, oil's up, what, 3 point something? Yeah, 3.7. Ah, look at that. It's popping off of this bearish trend line here. It's been holding up nicely, and you're starting to pop above it. That could also be fueling that yield higher story. That's the thing about trading this market. It's very tricky, guys. You have the fundamentals, the data saying one thing, but then you just have this other dark cloud looming above that's like disrupting that, or that can disrupt that. So we'll see what happens with oil. If it holds nicely to this trend line, like if you just see a wick or something and it closed ultimately red, that would be good. But if you continue to see oil higher, then what I would do for my personal trading would be, okay, if you see oil higher, you probably have pressure in gold in the short term. And so this level probably doesn't hold. And then you probably just get a closer probability of you actually hitting 4320, where I would ultimately look to buy it. So I'll be monitoring that. Gold and indices down together. I mean, gold in recent times has been acting like a risk asset. I mean, when you have yields higher, gold does not like that. And when you have yields lower, gold loves that. And so today you're having a yield up day. So gold is lower on top of that. What do you think could cause yields to fall? Well, I think the biggest immediate reaction for yields would be something Middle East related regarding peace. So if you were to have a definite end to the war in the Middle East, that will go ahead and ease the inflation fears, because of the oil supply being disrupted. That right there would be an immediate relief in yields, I think. Now, how much does it go? I really don't know. But to me, that's like, okay, cool. Another thing that would ease yields is just more confidence in the Fed, right? So right now there's a debate whether the lack of forward guidance is good or bad, right? And so that creates a little bit of division there in the market when it comes to sentiment, and so that's why you also see some yields higher on top of that. Another thing could be, U.S. debt, the deficit's, $40 trillion in debt. If there is something to help ease that, I think that would be good for yields lower. So there's like a couple things there. But if you're talking like immediate relief, I would say Middle East, right? That stuff. But there's just different things that are causing the uncertainty. Yeah, I agree with Max on this one. Could be a great way to buy the dip. I'm definitely looking for a dip. I'm very open to it. For sure. I think me personally right now, the way I stand, my kind of personal stance is just given the way it's been playing out. If you see something escalatory over the weekend and you see gold fall really hard on top of that, I'm likely looking to fade that. So I'm looking to fade any war escalation headlines. So that's kind of what I'm looking to do. So with gold here, if you see a big, why is it not loading the chart? I guess I'll go to this one. If you were to see gold fall to, let's say, gold gaps lower over the weekend, opens like this, and then it continues falling to like this level here, and there's like peak fear now, like, oh my god, there's escalations back in the Middle East, I'd likely fade that. Okay, just because we know like things get walked back all the time. So I would very be open minded to that, and I would receive that well. I think we can get a VIX event today. What's the VIX doing? 7. We're still in the teens, but when it's sleepy like this, and when it wakes up, it'll wake up. I think options were expiring yesterday or today for VIX, so we'll see. Let's look at some sentiment reads. Yeah, shall we? Let's look at gold because I'm interested in gold. Let's go to crowd sentiment. Let's look at retail positioning. 92% of retail is long gold right now. And then let's go to put to call ratio. Bullish sentiment. Net options volume. Cooling off a little bit. Nothing extreme. What is the Nasdaq doing too? Flat. Yeah, it's lackluster. S&P. Getting red there. US dollar fading. Ballout says the calm before the storm. I think that's possible, man. if yields do not respond well to yesterday's events and they start making fresh highs, yeah. If I were a portfolio manager and I saw that, I would try to reduce my equity exposure. That's what I would say. Alan is addicted to gold now. FX is at the bottom of the list. Listen, man, what I would say is I understand now. Okay. I understand the appeal. I've always known the appeal, but after actually dabbling in, like I always look at these markets, all of these markets are intertwined together, right? They all matter to each other. Yields matter, even though I don't trade like TLT. Yields matter a lot. FX matters a lot. Equities matter. Metals matter a lot. I get that, but I could see now the appeal to trading gold, and it's just the best thing to do right now. So yes, you guys have indoctrinated me into gold. Shout out A1 live stream. Can you show the CFTC data for sure, man? Let's go ahead and look at that. Let's look at the recent buys and sales for the big institutions. Let's see. This is last week's reports, last Friday. So the biggest accumulators were S&P, pound, bond yields. Interesting. They bought bonds, US dollar. And then on the bearish side, what do we see on bearish side? The Nasdaq, the Nikkei, which makes sense. Swiss franc, platinum, Nasdaq, Nikkei. Everything else is pretty neutral. You meant FX is boring a lot? Yeah, it can be. It can be. I personally like it. I appreciate the range trade, you know? Like when you get a moment like this where you have a chart like the DXY where you have clear support and then clear resistance on the higher time frames. And if you can find yourself at one of these ends, to me, that's fun. I like that. I like, trading it from zone to zone. Now, when it gets boring or trickier is when you're like in the middle of the zone because things can go either way, of course. But if you can catch a bounce from one of these levels, then that to me is a kind of a no-brainer trade in Forex, as long as the macro aligns, of course. And what usually happens is that the macro generally always finds a way to align. You lie. The PAMP on gold is irresistible. PAMP? What is PAMP? Can you educate me on PAMP? I don't know. Yes, the pump on gold is irresistible. I mean, I could see it, man, because when it starts to move, when gold starts to move, that thing moves, man. So I definitely want to be participating in that. PAMP equals pump. Okay, my bad, guys. My bad. You educated me on PAMP. Appreciate it. Guys, one thing I would say, I don't know if I mentioned this earlier, but if you are looking for a new brokerage, ACAP gives you 20% on your money if you sign up for the welcome bonus. So the link is right here in the chat. I'll drop it one more time for you guys. It's for everyone besides the US, but it's a really good brokerage. Very well respected. Been around for a while too. So you can go ahead and get yourself a new relationship with a new brokerage. You get 20% on your money, man. So, it's a pretty good deal. I've never seen an offer that lucrative, but 20% on your welcome money, on your welcome bonus is pretty good. Let's see. Gold is pulling back a little bit. Do I take the trade or not? It's getting a bullish ring on an edge finder. I like it. I like the trade. There seems to be some kind of follow through though. You're seeing dollar down today mostly. Euros up, pounds up. Pounds actually breaking out of this level 2. This actually could be another contender. besides euro dollar. Which prop firm are you using to trade alongside your personal fund? FTMO. I just found it to be the most compatible with my rules. So that's something that I learned, actually, that like these firms are kind of tricky, man. They're kind of tricky. They like to play games and they like to hide stuff. So for me, I just wanted something as vanilla as I possibly could find. And FTML was kind of that firm for me, where you can hold trades over the weekend, you can hold over news. There's really no restrictions on that, and so it complemented my style well. But I will always say, like, do your due diligence, because prop firms are a really cool tool to leverage your capital, but also too, like, if you're a swing trader by nature and you hold through news all the time, but then you are required by the firm to liquidate a position as soon as it hits 5 p.m. or whatever, and then you have to reopen and stuff like that. Things like that will hinder your performance. So definitely be mindful of that before you purchase a prop firm and stuff like that. But if you are ready for funding, I would say just join the Telegram channel or just go to a1trading.com. We have lots of discount codes and stuff like that for various prop firms. So we have an abundance of prop firms to choose from. I'm sure one of those will fit your style, and then just go through with it if you're ready for it. But I'm going to go ahead and transition the show over to Nick, and I'll be back here in about 30 minutes or so. So thank you guys for the lovely time. See you in a bit.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back. Hope you guys are doing well. Shout out Alan, great segment, and James before him, and Marco before him. We've got quite the lineup every day. It's been awesome just to see all this really great content coming together all the time on the streams. For traders who are serious, I encourage you, hit the subscribe button, come back and hang out with us. We are here multiple hours per day, 3 to 5 hours per day streaming between everybody who comes on. And I like the rotation. I think that the rotation, first of all, it means we're live longer because I can only do so much time myself. But then I have all these wonderful other traders that share insights and ideas, and makes it so that you, the viewer, hopefully you can turn on the live stream at the beginning of your trading session and you can listen through the whole trading session. That's the goal, is to give you some sort of commentary, someone who you can, listen in, see what's going on. If something breaks in the headline side of things, you have coverage, etc. Anyways, shout out to all the other traders who share insights on here. So let's see, where are we at with things? Yesterday, you had a Hulk candle to the upside, is what we call these. Massive upside move in the price of gold. Today, you are getting a retracement of that move. I heard Alan talking a little bit about maybe looking at some long setups here. I'm not opposed to that either. I may be taking a stab here on the long side of gold. If I do take this trade, this is a pretty aggressive entry. I'm not going to lie. Now, when I say aggressive to the new trader out there, what I'm definitely not saying is this is an aggressive entry where I'm going to throw a huge risk on my account. No. When I say aggressive entry, what I'm clarifying is that if I were to take a trade right here, this would be a pretty minor pullback in context of the move that we saw yesterday. So I would probably reflect that aggression in terms of my entry by reducing my trade size. Like, this would not be a huge, this is the trade I've been waiting for long on gold. But because I think gold has so many reasons to keep going higher, generally speaking, I may still take the stab here on the long side around 44.30, 44.25. If I take that trade, I'll share it inside Discord. I am not fully committed to taking trade there, but I'm considering it. I'm also liking still the level of support here that we found here and here, this 43.25 level. And I think this is why, you can go back and forth on should you trade, should you invest. Like I've recently tapped into something kind of interesting on my channel because I've been covering gold so much. I've tapped into the stackers in the room. Is anyone a gold stacker here? If you're a stacker, I don't know, type me in the chat or something. If you know what that is, if you know what I'm talking about. Gold stackers are people who like to buy physical precious metals, gold and silver. They are not fans of trading it. They are not fans of, they're scared of the fiat system. They want to hedge out the risk. And I think it's perfectly fine. I too am a stacker to an extent. However, I don't know how, but my channel has like suddenly surged in popularity for the stackers specifically. And they do not like trading. So it's this weird thing. I'm getting comments from people who are like, just own it, don't trade it. And I'm like, this is a trading channel and we're trading gold. But I also want to clarify, I'm not trading gold actively for fun. I believe and have been able to generate more returns through gold trading than I have passively investing in it. And that's why I trade it. But I also recognize that for most people, they're not going to be able to do that. And if they try to do that, they're more likely to lose money than not. Most people who try to trade, period, are going to lose more money than they don't. This is a really difficult game, and it takes a lot of work. It's a test position with bigger size waiting to be deployed if a bigger pullback comes. Alan, I'm with you on that. I think it's same concept. Like, this might be a more aggressive entry, not in size, but in timing. Like, I think that you very well could continue to see that pullback take place. I like this level more, and I like levels below it even more from a long side trade. Like, from a daily chart perspective, I really like 43.50 and I like 4,200. 4,200 is the level that I see everywhere. Everyone's kind of watching that. Maybe we come back and test that. But anyways, going off my rant for a second, the other thing about the stacker community, and I'm telling you this as someone who stacks, physical to an extent, not a ton of it, but I do some physical stacking. I'm a gold long-term bull, silver long-term bull. As someone who is one of you, there's also this really weird mentality amongst the gold perma bulls who any mention of the idea of a retracement or a dip or a pullback or a sell-off in gold is personally offensible to them, and they come into the comment section very angry. I just think that you want to be careful with that because none of us know what the price is going to do with certainty. And I think it's important that if you're a trader, you have to be open-minded. And I think people who have that perma anything mentality should not trade, because trading requires you to be nimble, react to new information, be open-minded, manage your risk. All of these things do not mesh well with someone who is, the fiat system is going to collapse and gold's going to go straight up, and it's you should buy it every single day. Don't time it, hold it, don't, so anyways, I think it's important that if you are trading, that is a different thing than passively investing. If you're passively investing in precious metals, in gold, silver, in stocks, in real estate, whatever. Yeah, time is going to be your friend, but you shouldn't be watching videos every single day about it and commenting, it's going to go up, it's going to go down. So my perspective is, know if you are trading it or if you are investing in it. Those are two different things. So I like the idea of trading gold because there's also times where gold and silver collapse. And if you're just someone who buys and holds, if you bought and held over here in October of 2025, you had one of the best periods ever, watched it all go away, and now it's resurfacing. You're up 1 or 2% on your returns there. So, and then there's also periods of time we mention all the time. There's long stretches where gold and silver can move sideways for even a decade or 3 decades, like you had in the 1980s. So that's why I trade it. I think that there are times to be long, there are times to be short, there are times to be out completely. And whether I'm right and wrong in that, you can make your own decision to trade versus to just hold it passively. But I prefer to trade and watch the incoming data. But yeah, I stack and trade, but I admit it's harder to trade because when I'm holding physical, I have a hard time putting on a short trade. Vincent, that makes sense. I do that. So it is a little bit weird. That's why I don't generally love to be short gold. But also, there's not a lot of times where shorting gold makes a ton of sense to me. There was a period of time this year where shorting gold actually was one of my most profitable trades this year. Actually, I made more money shorting silver than I did shorting gold. Shorting silver was a phenomenal trade for a big chunk of this year. And I'm saying that as someone who likes physical precious metals for the long term. There's also times to be short metals. However, I don't think that is for everyone. If you are not a trader who wants to stare at the charts all the time and be studying the stuff, you shouldn't trade it at all. But if you're someone who likes digging into the macro, focusing on what the Fed is doing, charts, all that stuff, to each their own. If you want to make the decision to try and trade, you are insane, just like me. But it is possible. I've been able to generate more returns through active trading than by holding passively. So let's see. With precious metals, we'll watch gold here today. I would like to see a little bit of a squeeze lower here. If we get a move down maybe into the, what is this? What is this level? This level is 44.15, 44.20. That might be an area where I take an attempt on the long side of gold. It's a pretty aggressive attempt. But that would also be, let's just see on the 4-hour chart where that would line up in terms of a Fibonacci retracement. Like this looks good. That 38.2 to 50% retracement zone. If we get another flush through the lows here, New York session is underway. We've got, the US stock market open up in 45 minutes. That'll bring a lot of volume in. If we get a flush down into that area, I may take an attempt on the long side of gold with a stop below. And if I'm wrong in that thesis, if I'm wrong in that idea, then I will just cut the trade. Because I very well could be too early to what is, we've had a lot of up, now pulling back here. That pullback could be, a week long, could be a 2-week long period. So we'll see. Let's see. Bitcoin is also really kind of an insane market right now. Look at this. Bitcoin absolutely woke up. We just broke through major resistance here. I don't really have a strong bias on Bitcoin, and if I had any bias, it would be more pessimistic than bullish. Though this looks really good, so I would not fight that chart. That looks like a solid, strong technical score here. You can see +3. That makes sense. However, the crowd jumped into the bullish side of Bitcoin here. Fundamentals also showing kind of a mixed to slightly bearish outlook for that. Softer economic growth, softer jobs prints. Weekly jobless claims came in today better than expected. So we can see that is, we got 206 versus 210 expected for unemployment claims. That's positive. So that's a slightly better picture for the labor market. Still labor market though, showing signs of cooling. Let's also take a look at Nasdaq. This is what makes Bitcoin especially interesting to me today, is the fact that you have Nas down almost 1%, following through despite what yesterday ideally should be a pretty bullish thing for stocks, right? The idea that yields are effectively being stunted from going higher, at least attempted to be stunted by the Treasury. big buying going on, still wasn't enough to get the Nasdaq to pop. That's interesting. It did initially. You can see if we go back in time here to yesterday's 8:30 surprise announcement, look at what you had happen. So initially, this is the reaction that I would expect, is stocks to rally higher on that news. Lower yields, less rate hikes, those are really positive stories for Nasdaq, right? For tech stocks. And yet still you have today stocks rolling over. That's an interesting dynamic. And that tells me that, right now, I think this is still kind of a range bound market as opposed to a very trending one. The S&P 500 does look a little healthier. This 7,600 level, I'm really curious to see as you come into this area. Do you find buyers? I would say path of least resistance is probably yes. You have an upward trend that's more tangible, I would say, in the S&P than it is in the Nasdaq. Nasdaq has yet to reach all-time highs. And what I would caution us on with Nasdaq is if you end up kind of seeing a lower high print here, and I think it's too early to say that, but I'm just pointing out, like, if you were to see something like this, a collapse down, that would be really bearish. Like, that technical chart would not be a pretty one. If you have this new kind of downward channel forming in the Nasdaq, tech stocks could certainly flush lower in that dynamic. So you also have Dow Jones selling. Look at this. Dow is retesting a major level of support. I don't think I'm going to be buying this. Yeah, I'm not going to be buying this because fundamentals here a little bit mixed here. There may be some individual sectors that I may take a long attempt on, but yeah, we'll see. Nick, you should add whale buys and sells for crypto. You can get them from a third-party website, Hyperliquid or Nansen. Just a suggestion. Yeah, that's an interesting idea, Cedric. Thanks. I wouldn't say Edgefinder is like a super crypto specialized thing. I have thought about in the past making some kind of a crypto. We have Edgefinder, which is for futures, commodities, etc. We have Stockbox, which is for options and for individual stocks and for ETFs. We have this one. And then simultaneously, like, this is for individual stocks, which I use all the time for finding stock trades. Maybe in the future we'll do something crypto related, but to be completely honest, from a product release basis, crypto is so hard because it's so come and go. And on our side, you have to understand these things are really expensive to build. And so if we're going to invest, at this point, these are in the millions in terms of like how much it costs to build, maintain, all the support side, all the tutorials, all the website, the videos, all the stuff that goes into launching a product like this and supporting thousands of people. It's expensive, right? So if we're going to build out something, there has to be the demand there. And the problem with crypto, just being real with you, is that it is so come and go. Sometimes crypto is interesting to people, sometimes it's not. And when you have that up and down in a product's demand cycle, the worst thing would be we spend a tremendous amount of time, energy, money, resources to build something like that, and then there's just not a demand for it. Like, that would be a ginormous loss. So yeah, I mean, and vice versa, if there was but we're just from a company decision perspective, that would be kind of a gamble, probably not worth taking. Whereas with Edgefinder, we have gold in here. We have consistent demand from clients all around the world who use our stuff to help better scan markets. Like, we have a never-ending demand for our products, which is great. People love this stuff. Same with the stock box, right? There's tons of people who trade stocks, ETFs, sectors, options. Like, there's a lot of people who are interested in that sort of stuff. And that gives us a runway to be able to invest significant amounts of capital into building those sorts of tools. So anyways, that is a side tangent, but I like to share insights on what's going on behind the scenes with our stuff. Let's see what else we have. US 10-year Treasury. Are we looking at long still? Yesterday, I mentioned briefly the idea of a possible bullish flip, but what I don't like is notice how with TLT, this is long duration bonds. This is a 20+ year Treasury bond ETF. What you can see here is that we popped up into this resistance zone, and unfortunately, sellers just took it from there, like so far. We'll see what yields do. I think one of the more dire circumstances for stocks would be if you got that level of commitment, that level of like, we are going to buy US treasuries, and then yields ripped to highs anyways. That would spook some people, including me. Nick, how many people use Edgefinder? Thousands of people use Edgefinder. We have thousands of people around the world using the product on a daily basis. I don't know, it could be 100 to 200, logins plus. I haven't checked in a while, but it varies. When markets are more interesting, typically user interaction goes up. When markets are quieter, interaction's lower. So it just kind of depends. But yeah, we have quite a number of people who use our stuff, which is just awesome. I have to say, it is a really cool experience to be on the back end of things, building our software, receiving all the questions that we get and all the feedback we get, the recommendations from people, the suggestions. It's cool. It's a lot of fun. So it's my day job, genuinely. And people like to point out, they're like, your YouTube channel is you make money from YouTube and from selling things, not from trading. Well, I do actually genuinely trade and make money doing that, but I also definitely make money from YouTube and selling a product. And I couldn't be more proud about it. Like, we have thousands of people who use our stuff and are involved in and invested in making the tool better for the sake of improving their trading. Like, that is just awesome. It's like the coolest thing ever. So it definitely gets me up in the morning. So I am very happy to do what I do, and certainly do not recommend personally that anyone trades solely for a living. It's a really, really not fun thing to do. Trading solely for a living, your income is like this, right? Your income is gradually going up overall, but you have big down months, big up months. Psychologically, I don't recommend anyone to do that. I don't know what kind of sane person wants their income to be huge one month and then down the next month and then up the next month. Even if you're overall making profit, that is still psychologically volatile. So instead, I think that everyone should have some kind of multifaceted approach to income. Even if you want to trade for a living someday, like, trading for a living is so overrated. I could do it. I certainly could only trade for a living, but I don't want to. I like having other income sources. I like having something else to do with my time and energy than just trading. I love trading. It's I'm obsessed with the markets and learning more. But attaching your entire identity, income source, etc., to markets solely is not wise. Even Warren Buffett, made a ton of money through wealth management, and all the different things that he did in addition. So I don't think anyone should only trade for a living, personally. Unless you're just really bored, retired, and have like $15 million sitting in your trading accounts, then maybe like you could trade so low risk and still make massive income, etc. But even then, I feel like it'd be cool to do, I don't know, like a mentorship program or something just to keep yourself busy. Because I just don't think it's a sustainable lifestyle to have all of your income coming just from trading, because of how inconsistent trading returns are certainly going to be. Doesn't matter your strategy, doesn't matter how good you are. No one wins every single month forever, right? You're going to have down months. So yeah, whatever that may be, having some other thing is, I think, actually a really good thing for your trading. Also, not to mention, having something else going on keeps me from staring at the chart all day long. Like, because I'm building software, because I'm making YouTube videos, because I'm doing other things, it gives me a creative outlet that I'm doing something else and just letting my trades play out in the background. Like, I'm a swing trader too, so I'm not, tied to having to day trade the 1 minute chart all day long. That to me sounds like not fun. Nick, how would Edgefinder differ from AI scraping macroeconomic data and compromising it into a sort of directional bias as a percentage? That's a good question, and I'll give you an answer. I personally think, ask yourself, how many people have gone from not knowing much about trading, unprofitable, to very profitable, sitting on the beach because ChatGPT now trades for them? The answer is no, nada, right? AI is a super useful tool. We use a ton of AI within Edgefinder. The difference is at the end of the day, you're still the operator, right? You are still the one making decisions to take trades. You are still the one managing your risk. You're still the one interpreting to some extent the information that is coming into your brain. The human brain is still powerful and has a leg up in AI because markets are humans. Even with AI, robots, high frequency trading behind the scenes, all that going on, there's still humans behind everything, right? So I think the human mind is powerful. So Edgefinder is not a press the power button and it starts trading for you and printing out money. Edgefinder is a data sourcing screener. It visualizes stuff really simply. It's color coded specifically to make sense for people who are trying to get a better grasp of fundamentals. It's as much of a resource insight generator, summarizing tool as it is a educational source. It's multifaceted in that way. Edgefinder for people, like everyone now has AI. We are still seeing tremendous demand for our products. This is also, by the way, this is one of the reasons why I think software stocks are worth buying on the dip, in my personal opinion, not financial advice. Don't copy what I'm doing. I think generally I like software stocks on the dip because there is a huge innate need for taking information and actually making it digestible, understandable, and applicable. That's what Edgefinder does. Yes, you can do AI prompts. You get a text wall response from your favorite ChatGPT or whatever. I haven't replaced anything with that. In fact, AI is helping to generate stuff like this. But I think having, to some extent, a visual software, something that is static, pre-populated, and by the way, you don't know the right prompts to ask. If you're still a learning trader, you don't really have the right prompts to ask in your head yet to the ChatGPT or to the Grok or Gemini or whatever you use, right? The questions have been asked for you if you buy a software that is built by traders who are actually successful. The prompts have been asked. Does that make sense? There is a knowledge gap. Same thing, and I'm bridging the gap here, like Intuit, right? People say, oh yeah, taxes are just going to be done by AI. There's a lot of compliance. There's a lot of in the know experts on accounting that are also baked into Intuit software. So if you're using QuickBooks, which is an accounting software that they offer, MailChimp, if you're using like all their different services, right? What's cool here is that there's a lot of questions that have already been asked for you. The experts are still in this. So I personally like Intuit, even though the stock has collapsed. I think personally that the market is to some extent getting it wrong on software stocks. It's my opinion. I could be wrong, but that's what makes a market. There's people who disagree for a reason. I don't think everyone needs Edgefinder, but I think we have a lot of people around the world who use our stuff for that very reason. The questions have been asked. The visuals have been made. There's been a lot of thinking, years and years of thinking that have gone into a product that you pick up and you buy for a one-time price, right? I didn't mean for this to sound like a sales pitch. It did come across hardcore like that, but it's a good question that someone asked in the chat. And there is your answer. So yes, tools are invaluable in today's trading land. And just because you have a ChatGPT prompt does not mean you have the right questions to ask, you have the right visuals created, et cetera, et cetera. So anyways, if you see the value in Edgefinder, you should get it. If you don't see the value, you should not get it. And it's as simple as that. It's like the old, sell me this pen. And the first question they always ask is like, well, do you need a pen? And if the answer is no, then you can't sell that person a pen. But if you like the visuals, if you don't want to spend countless hours trying to do spreadsheets yourself manually or reading articles, then Edgefinder might be worth considering. By the way, if you want to try it, we'll drop a link here in the chat to where you can sign up for a trial to Edgefinder if you want to explore it for yourself. We have also on our website, A1Trading.com. Check this out. You can also just navigate over to our website. And on our site, let me see if I can, I don't know why my menu is messed up. Under tutorials here, Edge Finder tutorials, you can read all the different features, all the different things that we've built within Edge Finder to try and bridge that gap to newer traders wanting to implement macro fundamentals into their analysis. That link is in the chat if you are interested in signing up for a trial, getting access to our course on fundamental analysis. It is free. Link is in the chat or in the description down below. Up next, we've got Miko Audu taking over the stream, talking trade setups that he's watching now, and he's going to get more technical than I was. I apologize for the rant here, but hopefully you found it valuable. I'm still generally looking for gold pullbacks if we can get them. I'm also still bearish on the dollar. Stocks do seem to be pulling back. I don't really have enough of a bias to go long or short on those ones. I am looking at possible gold shorts, but as they continue to show strength, oil shorts, they're looking strong. Oil's looking strong right now. I would like to see some kind of a breakdown in price. If that happens, I may be looking for oil shorts, but as it stands, going to kind of pass on this recent price action. Bitcoin looks really strong, neutral here though. I'm not interested in going long or short, but just an impressive mover today. That one's definitely kind of stealing the stage. Up next, after this quick break, Miko Audu is talking trade setups now. Just after that, stay tuned.
If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Okay, what's up, people? Hope everyone is doing well. As always, I'll go through a bunch of different markets, some which I'm looking at, some which are just kind of maybe some big moves, especially crypto side of things. If you do have any recommendations, stick it in the chat. More than happy to go through and take a look. Of course, any particular time frames, let me know. I'm happy to maneuver across. But yeah, I do have some interest in the market at the moment. Not any trades, but there's a few which I'm looking at. A couple yen pairs, pound yen and euro yen. Both have been pretty bullish. I mean, across the board, the yen pairs have been bullish since the massive sell-off, and it looks like we're just slowly climbing back up, which was kind of the expectation, really, because a lot of these big moves for the yen pairs, when we did have that big intervention, didn't really break any major structure. I mean, didn't really see much follow through. It was more like we just had the big sell-off and we didn't really persist. It's not like we start to trend bearish. It was pretty much an immediate correction, and price has been picking up momentum since then. So pound yen especially, and euro yen, both those two look really good. Of course, I kind of expect similar trades across the board, but these two, in terms of the technicals, look really good. So I'm looking for pound yen to come back into this zone. Now, this is really where the move happened. You can see we had very kind of flat corrective price action, and then suddenly massive bearish candles coming into play. So that's where I do expect price to be attracted towards, and that's really the bet. So you can see it's a very kind of small range we're kind of working with. The market's making higher highs and higher lows, and essentially as long as we keep that up, so as long as this let's make that orange, as long as this low doesn't get taken out, I'm expecting a push into this zone. So I'm gonna have to drop to like a more likely a 30-minute chart, maybe even 15, just to really maximize the risk reward. 4 hour probably there's not enough. The juice might not be worth the squeeze, but something like this on the 30-minute will attract me back into some structure here. You can see we had a very brief consolidation there on an intraday level.
that for me looks like an attractive place to bet on the next higher low, because that's all I'm doing, just trying to find the next higher low. And targets are pushed back to that zone where all that momentum came from. Euro yen, basically the same outlook there as well. So you can see that kind of consistent uptrend that we've had since the big kind of mini crash, so to speak. Now I'm expecting price to return back to this zone here. Again, we can very much go create new highs beyond this, but I'm not very much interested in the home run, and especially because I still think the yen crosses are a little bit sensitive. You know, we had a big intervention, doesn't mean we can't have another one, especially if price comes back to those prices again. So when I'm, especially in this climate, when I'm looking to trade the yen pairs, I kind of want to be in and out. You know, if I could have, if I can kind of speed up the time I'm in the trade, I would, because that means less time I'm exposed to this kind of madness. So yeah, euro yen, pound yen, I'm like what I'm seeing. Euro yen, basically the same analysis as well. This is some really nice structure. Probably can look for opportunities in the hourly chart there in terms of entries, but the same logic applies. Looking for a pullback of a higher low, betting on the continuation of this uptrend back into some major structure above us. So the 2 yen pairs definitely have my interest. Just need some pullbacks really before finding some entries. The indices have been very interesting, because actually coming into the week, I was pretty bullish on the Nasdaq, and I still am. I still do think there are some buys in the Nasdaq, and the whole theory behind this, especially went into a lot of detail last week on the stream, was okay. We've had some all-time highs for a lot of the major indices, major US indices, US 30, S&P, Nasdaq lagging behind quite severely actually. We haven't made new all-time highs for quite a while. The last time we did was back in June 2026. So we've been a while. Price has been underwater. Now, recently we had a lot of strength, of course, across the board. In terms of Nasdaq, we didn't quite see that strength take us to new highs. So I'm basically betting on price catching up with US 30, the S&P, etc. In terms of where I wanted to buy this week, I was looking for a very kind of quick, shallow pullback into this zone, but price just completely broke through. Didn't even give me a chance to find an entry. So yeah, maybe dodged the bullet in that sense. But yeah, looking for price to basically bounce in that zone. Is broken through. So it's a deeper correction than I anticipated, but not necessarily to completely invalidate my bias. We are coming back into structure, which we held maybe a couple of weeks ago. You can see a really nice test there. For me, it's quite important that we do bounce quite strongly off this level, because if price does break through that, maybe this is another lower high. You know, you can see price has put one in there, it's put another one in there, just about. Maybe this is a third. And if you do break through that, I wouldn't be surprised maybe if you do come back to lows and see a lot more downside. So if this is price, you know, bottoming out and getting ready for continuation of the trend back to highs, well, I want to see support hold. I don't want to see support start to break. I've already seen some more kind of minor local support break, which is not really significant in terms of direction, but it does tell us a bit of the story. It means that the buyers weren't as strong, at least as I anticipated. So we've had a deeper correction, but will this more significant support level hold us? At the moment, we just come back to test it. We'll see. In terms of US 30 and the S&P, I like these for some short-term downside opportunities. I'm still very bullish on US 30 and the S&P, but we have seen consistent bearish momentum since, what was it, 5th of August. So since the start of the month, we've seen consistent bearish momentum. Multiple times US 30s tried to rally and tried to get back to highs. You can see a bit of a wick there, failed, another push there, failed, another push there recently, there, failed. So we've had multiple attempts of price trying to get back to highs, but basically failing. And the way I kind of picture it is, you know, price is trying to continue, but doesn't quite have enough strength to do so. Therefore, it's likely going to have a deeper correction to go and find more significant support level, some more buys to successfully continue. So price just has to keep coming down until it's, you know, it's met its match sort of, and then it can continue higher. And where could that be? Well, I'm looking at this, you know, bearish leg that took us lower, and then excuse me, and price suddenly reverse. Just flick the mic there. So you can see it's a very short. There's not a lot of room to work with. So to be honest, I don't think I'll probably get the trade just because of how aggressive this 4-hour candle just closed. I kind of expect us just to keep falling really. But on the rare case, if price does pull back, I'm very interested for a retest of that broken level and some shorts to go and hit that zone where I think we can see some stronger buyers come in, maybe a stronger bullish reaction. Who knows? We could go a lot deeper than that, but that's just really the first area where I'll expect some buyers to come back in. So yeah, that's kind of the opportunity I'm looking at. And like I said, I'm looking at this big candle. I wouldn't be surprised if we just keep falling. If we can retrace, fantastic. This is the shorts I'm looking at. Again, I'll probably drop to like an hourly to trade that. And that's the short-term opportunity I'm looking at. You see a really, really strong move there. A lot of bearish pressure coming in. And basically the same idea with the S&P as well. And the S&P has a bit more room to work with, so I'd probably choose this over the US 30. But to be honest, I expect both of them to do similar moves. So yeah, for the S&P, I'm basically looking for the retest of this high here. So you can see price is breaking support to our left here. We've had an attempt to try and continue this bullish trend with this bullish move this week. Was that this week? Yeah, this week. That was yesterday. Failed, and I do expect price to slowly come lower, test this area, and then maybe we see some buyers come back in, and maybe the trend continues, or maybe go deeper. I'm not so interested in terms of if we're going to successfully hold that zone or not. My interest is price likely to come and test that support level, and I think we have a pretty good chance that is gonna take place, because support level higher up is not doing its job. So expect lower prices. So in terms of opportunities, I'm dropping to like an hour chart. I'm going to see what price can do in this area. Brief consolidation. Again, that's where the momentum came from today. Can we get a nice corrective pullback into that zone? And then there's the opportunity I'm looking at. So quite intraday opportunities there. The bigger swing trade for me looks like it's on the Nasdaq, which I'm interested to take maybe for a couple of weeks, depending on how things play out. This is the biggest swing opportunity I'm interested in. It's not quite ready yet, but definitely testing a zone where my interest is definitely peaking, and we'll see what happens from there. What's up, Adam? I hope you're doing good. Yes, I can take a look at silver, DXY. I can take a look and go through gold as well. Yes, I can take a look at the Japanese index too. Indice. I'll go through DXY, silver, and gold first. Then I'll take a look at the yen. So yeah, DXY, very bearish. Really strong move this week. We had a very corrective price action the week prior, and this week kind of just blown that out the water. Really strong move. Now, the funny thing with the DXY is, okay, we're seeing all this strength, but does this mean anything, especially from a technical standpoint? Does this mean anything? Has this kickstarted the trend? Has it broken an old trend? I don't think it really has done either, to be honest, because, sorry, there's some construction outside. I don't think it's really done either, to be honest, because we haven't really been trending up. We haven't really been trending down. I could just draw a box out of this price action for the past year, and that's basically just a range. So the way I see it, price tried to have a bit of a breakout, failed, and now we're coming back inside the range. So now this is back into very noisy territory, and I'm looking at this on a higher time frame. I'll take a look at it in a lower time frame in a moment. But from a higher time frame perspective, this is just a lot of noisy price action. Kind of clear highs of the range, clear lows of the range. Now we're coming back into the midpoint, which is notoriously the most ambiguous place in a range. That's where price is going to be the noisiest, difficult to predict. Stop loss placements are going to be horrendous as well. I would just do my best to avoid any big swing trades in that area, especially when you're kind of looking to play some swings for a week or two. I think intraday certainly can get some nice opportunities, or we can speak about that and some other USD pairs in the moment. But yeah, I'm not a big fan of where we're trading. If I drop to like a 4-hour chart, I think the safe trade here is just looking for a retest of structure and some more downside. I wouldn't be looking for any kind of meaningful follow through, touching on my previous point I just made. So if we could see something like this, a push back into support, I think that's a pretty smart trade. You've got momentum very much on the side of the bears here. You're seeing really meaningful downside momentum from the bears. Of course, we had a bit of consolidation last week, but that's kicked off again this week. So a retest of that area likely is going to give us another bearish reaction, but I just wouldn't bet on price going further. Not that we can't, we absolutely can. It's just where we're trading. Do I expect this bearish trend to really it really continue? Maybe, but it's just not quite clear, especially when I'm looking at the technicals. We've got meaningful support just below us. So yeah, DXY, that's kind of my take. If we go take a look at the metals, I'll go through silver, and I'll take a look at gold, and I'll take a look at the yen as well. So yeah, silver this week, nice push higher. I actually did miss a trade on silver. This was the zone I was looking at coming into the week. I mean, I was looking for price to come a bit deeper than that, but I did say I'll give this level a bit of a stab. To be honest, I'm not too sure if I would have taken the trade actually, because this is a very kind of minute reaction on the 4-hour time frame. So it's a very slight bullish candle. I probably would have waited for another candle to close, and then this is just too big for me to enter because my risk reward is completely gone with resistance just above our heads there. So because of that, I probably wouldn't have taken the trade, to be honest. But yeah, really nice retest of that zone. And we just about created new highs. Now, what's the next move for silver? Well, there is still room to the upside. Last week, I spoke about this massive zone here. This is kind of really where we had our meaningful consolidation before a lot of momentum came into the market. So that's really where I expect price to be drawn towards. Now, I wouldn't try and bet price will get there in one single trade, just because momentum is still kind of with the bears. I know the larger trend is up, but we've had some consistency with these lower highs, and I wouldn't overlook that completely. So I do think there is more room to the upside. So buys is very much my main focus. As long as market structure persists, as long as we keep seeing higher highs and higher lows, I do think price is just going to trend higher. And it's just about finding good zones, good levels to place your bets, place your entries, stops, etc., and take that higher. Of course, if price was to suddenly do this and break through this low, especially because now we just made a new high, yeah, that would make me quickly reinvestigate my bias. But yeah, stay above that low. I do think we'll see some healthy corrections and some more upside. In terms of opportunity, I'd probably wait for a more meaningful break of this high just to really create some distance. And then this becomes an area to focus on for a retest and placing some entries around and stops below. Right now, we're kind of just trading alongside that resistance. So I don't think this is a clean area to place entries just yet. But yeah, more kind of meaningful breakout does make things very, very interesting there. Yeah, I think this could be a meaningful level to target around 70, 71 to keep an eye on. But yeah, silver, excuse me, very, very bullish on at the moment. In terms of gold, gold always very similar analysis when I look at silver, pretty much doing the same thing. Typically, when I'm looking at the metals, well, when I'm looking at gold and silver, I'm always kind of just saying, okay, which is the more attractive one to trade, which is giving me the better risk reward or the better entry. Because yeah, likely they're both going to do the same thing, so there's no need to trade both. But in terms of gold, I think gold's the slightly noisy one. I do like silver a little bit more, just because gold's just pushed into this area, which gave us a pretty meaningful consolidation and a pretty meaningful move down. So the way I see it, we're kind of pushing towards kind of bearish territory now. So although there is still probably a bit more room to the upside, but I'm looking at where gold is trading into, I think it's a bit more noisy. And really, to be honest, we're kind of coming back into meaningful areas on the weekly chart already. And if we take a look at silver quickly, maybe we'll go back, take a look at silver quickly. You can see we're not quite really at any meaningful place yet on silver. This is really the zone I'm expecting price to come and test before maybe we sell off again. So the bet or the trade is I'm expecting price to get there, and then we'll investigate to see if we're going to maybe sell off again or break through, etc. But gold's kind of already reached that area, especially when we drop to the 4-hour time frame. You can see we had a lot of momentum from there. So for me, I do think there's still upside for gold. I mean, we're still seeing a pretty clear trend, higher highs and higher lows. Again, same analysis stands. As long as these lows hold, I do think price is likely to continue higher. But I think there's just a clearer path for silver. And yeah, price action is just slightly cleaner as well. So I do think this is a really good opportunity to keep an eye on. And I do think silver's the better market. In terms of the yen, so I was speaking earlier that I'm very interested in buying pound yen, buying euro yen. And in terms of the JP225, I mean, this is my analysis from a few weeks back. In terms of this one, I mean, there is potential for a larger pullback, especially with the way we're seeing the daily close there, especially a couple of days ago. We are pushing into support and on a more local level. In terms of the daily chart, this has been a very critical support level because this gave us our last bullish swing. And you can see price slightly dipped below that, but then recovered quite quickly. So as long as price can hold this, I would still say I'm bullish. And I would still say the trend is very much live. If we do break through this, I wouldn't say the trend is necessarily over, but I would expect to see a bit of a counter trend form there, maybe taking us back down to 54.50 area. So I would keep a very close eye in terms of a daily chart around that 62, 61K area. That keeps me long-term bullish. In terms of the 4-hour charts, I mean, we're pushing into support now, so it's not like I would like to sell the market really because of where we're positioned. I don't think it's the best place for a short. Let's say if price can break through this. Let's say if we can get a strong, meaningful candle breaking through that and then try and get a pullback, and that's something I'll be interested in because we've cleared support, and now I would expect price to come back to that daily zone we just mentioned, and that will be the trade, trading that kind of gap back into support there. And of course, this potentially could be an area you're looking for a retest of, and looking for some more downside from that zone there. So yeah, I do think the yen, the indices got a bit more downside, to be honest. I do think we can see that kind of persist. It'll be interesting to see how that kind of plays out on the other yen pairs. Because I said I'm looking to buy euro yen and pound yen, but yeah, really meaningful sell off there. It doesn't look like this level is going to hold. I mean, if it does, I'll stand corrected. But if it does break, I think the shorts there look of good quality. So I would keep a very close eye on that. And also I did want to mention Aussie CAD. Aussie CAD has been a market which I've kept a close eye on for quite some time. And I say this because it's a market that's just been consolidating for quite some time as well. And I'm basically looking for the break of that consolidation because I do think when it does break, it's probably going to give us some really, really meaningful moves. And I say that because Aussie CAD is a very corrective pair, historically doesn't trend too well, consistently kind of fluctuating up and down around the mean. As of late, we have seen a pretty decent trend. We had a pretty big move here, a pretty meaningful one. I do think price is overdue that correction. Now, that's not necessarily why I'm expecting price to go down, but just on average, you would probably expect a correction, a meaningful one, pretty soon. And you can see where we're trading into major highs on the left, where we had a really significant move to the downside before. And when I do look at the daily chart, all I see is price failing to create new highs. And we have this support level, which price has tested on numerous occasions. And I do expect it to break. And when I look at levels which price tests on multiple occasions, there's only two things price is going to do at support. It's either eventually going to pull away from that support and that support level is going to hold, or price is going to break through that support. Breakthrough. Now, it doesn't mean we'll go and break through on the next attempt. Price might bounce again, but I do think the likelihood is that this support eventually does break. And the next area or meaningful area of support I see below that is around this area here, just where we had some brief strength come back into the market. So I do see a lot of downside for Aussie CAD. And why I'm interested in this one is because it's a consolidation which is likely to break out and likely to give you some fast-paced momentum, and the risk to reward looks really attractive. If we can get this swing all the way back down there, that's a pretty meaningful move, especially on a market like Aussie CAD. So the way I'm looking to trade this, I'm looking to trade this in two steps, really. If I drop to an hour chart, because that's really where I'm looking for entries, I'm looking for pullback anywhere within this leg here. Yeah, that's kind of our last pullback. So essentially, it's something like this, and then a move down. As long as we don't take out this high, the buy still stands. So I'm basically just betting on a push back to that support level, which is the same support level we've been bouncing on for quite some time. So that's kind of the first half of the trade. The second half is looking for the breakout into that zone we just mentioned on the daily chart. So the way I'm looking to trade it is hopefully get some entries in that zone, some stops above that. First target there, maybe book 50% of the profits, remove risk, just because I think there's still a pretty good chance we do bounce and price reverses against me. So I do want to make sure I'm paying myself for at least catching that first move. But if I am right and price does break out, I also want to profit on that as well. And that's really where kind of the bulk of the profits will probably come from, because that's really where the risk reward opens up. So I'll hold 50% of the position back there. But yeah, the pullback I'm interested in is not quite there yet in terms of entries, but maybe the next 24 hours I could be taking some entries. Depends how everything sets. But yeah, that's really where my main focus is. The USD pairs, I didn't catch the big move there. And now that we have seen those big moves across the board, yeah, it's a little bit late for me to be entering. And I'm not looking to go against it as well. So it's like, okay, if I was in the sell for USD, great. If I didn't take the sell, now it's kind of letting things settle. Is this momentum looking to continue, or we're about to put in a low and price is about to reverse? Depends which USD pair you're looking at. But for example, for Euro USD, we've seen a lot of strength here, but now prices, smashing directly into some resistance here. I do think price is probably likely to maybe see some downside, but I'm not going to try and short the high and try and call the tops there. I'd be more interested, picking some longs down here if price would be, kind enough to see a nice corrective pullback into that zone. I think that could be a meaningful place for a buy. But again, we're probably a week away, from actually taking any opportunities at that zone there. So USD pairs, I'm probably just going to keep on the back burner from now until at least next week. I mean, it's already Thursday, so I don't expect any kind of meaningful pullbacks between, now and the end of the week. And if we do get there between now and the end of the week, it's probably going to be a very violent pullback. And that's not really the type of pullbacks I look to trade. I always like to trade pullbacks which are really corrective. They take their time, because that shows me that it's probably going to be a pullback. If price kind of races down to a level, you're kind of seeing strength where you expect a weakness, or mixed between weakness and strength. You typically expect the impulsive leg to be the strong one, and the pullback or the corrective leg to be the weaker one. So I like price taking its time. So if it does get there by Friday, it's probably not a trade I want to take, which is my point. Elsewhere, pound USD, I mean, we're testing some significant resistance here, so I suppose it's an area to keep an eye on. But I don't really see much opportunity here, unless you're kind of interested in like mean reversion trades, kind of shorting price at significant resistance. I'm more focused on momentum pullbacks, trend following. That's more my focus here. So I'm not really trying to bet on a reversal here or a breakout, to be honest. I'm just interested to see what price does next. And then, the other yen pairs, kind of similar opportunities, but I think pound and euro look the best. So I'll keep my focus there. And like I said, if I can get some shorts on the indices, that would be great. I'm not looking to trade both. Just looking to pick one up. I do like the S&P because it probably gives me more bang for my buck in terms of the risk to reward. I'm not the biggest fan of how this candle is closed. It's a really big wick there. I mean, it's technically broken structure because it's giving me a close, but there's always context. A break of structure is a break of structure, but then how does it break structure? Is always the second question I'm asking myself, and it didn't break very well. It would have been nice if majority of that wick was filled. Some more commanding break. I can trust that a little bit more. But if price kind of just about closes below, and especially leaves a big wick like it did there, sometimes you have to be a bit skeptical of those. But again, you don't want to be too picky either. We'll see what happens there with the S&P. US 30 looks good, but it's probably just going to roll back over to that zone. So yeah, I'm not too sure if I'll get the trade. And then euro yen and pound yen, I'll probably drop to like a 30-minute chart to try and trade these guys. And again, I'm just going to pick the better one. I might even look at this zone here as well. And I don't mind taking, maybe 2-3 stabs at the, 2-3 bites at the cherry, especially if the risk rewards in my favor. If it's not, then I'll keep it to one and make sure I don't overdo it. So yeah, gonna focus on those markets. Silver, I'll probably keep an eye, but until we get that follow through, I won't add it to my watch list because equally we could just roll back over there. And then other currency pairs, I don't really have much to say on, to be honest. Yeah, other USD pairs, like I said, if I'm not in the move, then I'm kind of waiting for the move to reset, which means another pullback, which could take a couple of days. And I'm not really trying to catch the low there. And then, of course, you had the big moves on crypto. BTC, absolutely monstrous move there. To be honest, the thing is, when we had that big move yesterday, I was actually looking for pullbacks. But now that price has already hit some zones here to the left, I'm not as interested anymore. I think Ethereum looks really interesting, especially with that big move there. I mean, we are coming back to some zones here where we can find some resistance, maybe some retracement, but it's a really commanding move from a very kind of significant level around 2K. I wouldn't be surprised if this high breaks and we go and test kind of the next big zone above us there. So I think crypto is definitely something to watch out for. These moves, they look pretty meaningful to me, not just in terms of momentum, but where they're located. And if you can break some significant structure, I'll be more than happy to follow some pullbacks. Okay, so we have run out of time. I'll pass it on to the next guest, but I do appreciate you guys listening in. If you have found the analysis useful, feel free to check out my channel, similar content over there. But guys, I hope you have a great end to your week. Thank you to Nick and the team for having me on the stream. Take care, and I'll see you all in the next one.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Back at it again here once more, and then I have my friend Marco joining me very shortly into this segment. So I hope you guys are doing good. Pretty quiet day, I would say. Nothing really much going on. You're seeing some pullbacks. I'm seeing a pullback in gold. To me, this is not a gold story ending. To me, this is just a pullback in an upward trend. So I'm just monitoring that, waiting for an entry opportunity. You could say the same thing about silver. You could say the same thing about DXY as well, right? Waiting for pullbacks. Pops, any pops, I'm looking to go ahead and fade that. So that's pretty much what I'm doing here. I only have one position on, which is USD CHF to the downside. Which on the prop firm account, I still have it running here. I have it trailed. So if we do have a pop in USD CHF, I'm looking to go ahead and allow this to hold. And if it does, we can continue for another leg lower. And then I'm looking to re-enter this trade on my live account. So that's what I'm looking for with USD CHF. And then I'm looking to also enter euro dollar long as well. Getting a retest into the 200-day moving average and take it to the long side once again. I really like the story of, dollar bearishness. So I'm going to stick with that. There's really nothing much has changed. If anything, the story has only improved. So especially after yesterday. So that's what I'm looking for. And then with gold, I'm waiting for either this level here. Let me go to the this chart here. With gold, I'm eyeing two levels. I'm eyeing this level right here for a small attempt to the upside to see if the momentum is strong enough to take us there. And if this one fails, then I am very open-minded to 4,300. That's kind of my next area of interest for gold. And if you look at it from a fib from low to high, the 4,300 level lines up perfectly with this 38.2% retracement level. And then if you measure the fib from this recent leg higher, right, you have this level here that we're about to tap into is the 38.2. So both technically correct, right? Just a matter of how aggressive you want to be. So I'm very open-minded to this position here with gold, filler position. It's going to be a lot less size just because my cost basis is going to be way up here near the highs instead of somewhere like this. So for me, I'm not a fan of like dynamic. I'm not a fan of static risk to reward or static risk. Right? Like some people say 1% per trade all the time. I'm not that way, right? Like if I'm clearly buying here instead of here, then why would I have the same exact risk size up here than I would down here? You know what I mean? Like it's you're chasing price now at this point, so there's no reason to be heavy, because there's definitely a possibility of a deeper pullback. And if a deeper pullback happens, you're still in an upward trend, right? It's not like the trade is invalidated. So that's just how I'm going about it. So with gold here, I'm going to take an attempt here. We are holding resistance at the 200-day moving average. So I'm curious to see if we blow past that. But we got up here rather fast, and we have some momentum going. So that is what I'm looking for on the gold side of things. Besides that, not really looking at other things. Dollar yen actually is kind of interesting too. Looking to see what happens here. I want to be a buyer of this market. If anything, I am a buyer in like in a DCA approach where I buy here, have another order here at 155, et cetera, and just try to catch the mean reversion to the upside. I like that trade a lot. So I'm not too eager to get into it right now. I don't think it'll hurt me if I wait. So I'm just going to wait a little bit and see what happens there. What else am I looking at? I'm looking at the price of oil too. It's popping off today. It was up 3% at one point. What scares me a little bit is that we are essentially testing this trend line here. I think if you get a firm close above, then you have risk to the upside there. And if that does happen, then you have inflation fears back, you have yields higher, and then that likely ripples some feathers in the gold trade. So I'm not a fan of that. So that's what I'm going to be looking at here for a little bit. But it seems like it's rejecting this level. You have it wicking off here, so we'll see how the close ends up happening. But that's kind of my thought process with oil. Other than that, I'm watching yields too, which are starting to roll over a little bit here intraday, but still elevated, and it's still swallowing up that candle from yesterday. So we'll see what happens there. But if you continue to see yields lower, especially the long end, that's going to be very bearish for the dollar and very bullish for gold. Pretty much it, though. That's pretty much the recap. That's kind of all of the macro drivers, I would say, that's driving this market. So we pretty much covered everything. And then you have equity indexes are still wonky. I just think there's really no appetite for me on the indexes. I just have to, stay away from that. Alan, levels of flip-flop beans in your body, max allocation. Dude, I have my flip-flop beans right here with me, and it's really good. So I'm in a good mood, man. I am in a good mood. Got my flip-flop beans. Waiting for some pullbacks. Got a runner going. So we'll see. But I really like dollar Swiss too to the downside. If it continues going in my favor, then cool. We actually got really close to that 200-day moving average, which I didn't think we were going to get there that fast. But we did go ahead and fall through rather quickly. But I do like this one to the downside. So if you do get a pop here, which you did see some kind of a pop here, so I'm curious if that was it. But if you have another revisit dollar Swiss into this level here, I am very keen to short this again. I like this one to the downside. It's the next best thing aside from the dollar. So you're starting to see an unwind of the dollar, right? So when we got over here to 102, everyone and their mom was saying, buy the dollar, right over here when we got to 101, 101.5, 102. So you had some definite crowded positioning there. And so I think you're starting to see an unwind of that. I mean, clearly, right? You broke some key levels of support. You broke this upward trend line. You broke the 200-day moving average. So all of the technical hurdles that you had to kind of overcome to justify some more downside have been broken. And so I like this trade. I'm just waiting for a pullback into this level. And I think that you have some ways to go. So we'll see if the objectives of the Treasury and of the Fed is to lower interest rates and be on that camp. then I'm going to be riding that tailwind too. So that's what I'm going to be doing here. I'm just waiting for some pullbacks, and then I'll re-enter and re-engage. But for now, I'm just going to go ahead and sit tight. Rashane says, I'm doing orange juice. Man, orange juice is fire. I love orange juice. Cat Swiss. Yeah, we'll go over Cat Swiss. What is Cat Swiss doing? I'll be honest, though. I'm not too inclined to touch the miners right now. But let's look at Cat Swiss here. One thing I will say, if you're seeing some strength in the Swiss franc, because it's the next best thing, and then you're also seeing improving fundamentals for Canada, I would imagine those are two strong currency pairs. And so, yeah, you're getting a neutral reading here on CAD Swiss. I wonder what the chart's doing, but I wouldn't imagine that it's anything enticing. Yeah, I wouldn't know how to trade this because these are two strong currencies in recent times. Ballout says Sunny D. Dude, man, Sunny D is like, dude, I don't even know how to describe Sunny D. It's good. Trust me, I drank a lot of that when I was younger. But man, is that I don't even think it's orange juice. I really don't think it's orange juice. I like which one do I like? I think it's called Tropical or whatever. Or no, Simply. Was it Simply? The ones you get at Chick-fil-A, you know? Those are really good. The Chick-fil-A orange juices are fantastic. But Sunny D, dude, it's just straight up sugar and other things, additives. Yeah, it's not orange juice. You know what's crazy though? Like those ice cream drumsticks that are really good. You guys know what I'm talking about? They have like the chocolate and the nuts on top, right? The little cone. They don't even call them ice cream. They just call it frozen dessert. Tiger's saying Sunny D with Everclear back in the day. What about yen pairs? Yeah, yen pairs. I would imagine here's what I'll say with yen pairs. It's really tricky because you have this Bank of Japan stuff looming, and also too, some could say, and I actually like this idea, but some could say that yesterday's move in the bond market was also to kind of help Japan out a little bit. So I do think that there's a possibility, and this is why I'm not rushing to buy dollar yen right now. I want to be a buyer of dollar yen. Don't get me wrong. If I get a good discount, which we are at a discount level of some sort right now, but if you get a meaningful discount, I'm a buyer of dollar yen. But yesterday's move could also be said that it was a kind of attempt to help Japan out, right? So Japan, they can't just buy their own debt, right? And they can't buy their own debt and then start raising interest rates because they have so much outstanding debt, right? That if they were to raise their interest rates, then that raises how much they have to pay for that debt, right? So it's kind of like a wash. So like if they can't do anything, what they could do is offload US debt and buy treasuries, Japan bonds. So with the Treasury buying back that US debt, they're kind of helping them with that transaction. So it's kind of like helping them out a little bit. So that's why I think that there's a potential for dollar yen to continue lower. I mean, look at this candle here. Well, it's not a big candle, right? Relative to like this one here. But nonetheless, it was a significant move to the downside, mostly off of yesterday. So I do think that if there's follow through with this move, you could see easily dollar yen visit 156 or 155 once again. But I'm waiting for it. So we'll see. We'll see. I want to be a buyer. I'm not in a rush to buy. And if I do buy, it's going to be with such little size anyway. So that just makes me not the most excited. It's one of those things where like if it happens, it happens. Max says you're short in gold, might be in trouble. Max, you shorted gold, man? Max, you must be wilding out over there, man. You're short in gold? Not financial advice or anything like that, but yeah, it seems like I guess it tapped into this level here and it's acting as support already. This might be a really strong momentum market where after yesterday you have any shallow pullback, you're buying that. We'll see. I could have entered right around here. We'll see. If we revisit this level again and it holds, that just shows me that momentum is quite strong here, and I'll take it to the upside. Silver's breaking higher, you say? Silver. Well, silver is green on the day and gold is red on the day, and silver is relatively higher than gold. Alan, just wait. You will know why we're shorting gold. So multiple of you are shorting gold. Am I missing something, guys? Am I missing something here? I am not a shorter of gold. I could see the I could see the vision, right? Maybe if you know, or if you're waiting for a pullback into this level here, right? Then one could say, well, I'm just going to short into the pullback, repivot, and then take it back long. I get that. But for me, I'm like, that's a big if. And I think that there's a lot of momentum in gold right now. I mean, look at this candle right here for yesterday. So I wouldn't do that myself, because there's a possibility that support gets bought right over here and just continues higher, which I'm a buyer at that level. I'm definitely willing to buy at that level. But dang, that's a risky one. Hey, Marco.
Hello, what's up?
What's up, man? How you been?
Pretty good, pretty good. We had a bit of a flip, and bond yields are back up. So is this going to be a classic Bank of Japan style intervention where it's just gonna get walked back completely? That I think is the next question. But what do you think? Have you seen the yields today?
If the environment doesn't support them to go lower, if you still have government spending, if you still have the debt rising, and if you still have the war in the Middle East there, I wouldn't see a reason for the yields to fall. But I will say this, Marco, in the official statements that the Treasury made out about their kind of increase from 2 to 4 billion, there was a line in there that said further further increases are to be determined. So I think that was their way of saying, like, if we need to up it, we will, like. So
Yeah.
I think that's also like some kind of a short-term cap, but we'll see what happens. You are seeing oil pop today, likely due to some Middle East stuff. I don't know what. It was at one point above this downward trend line here, which for me, if you find your way above this trend line, you're kind of back in this like no man's land here to the upside. But you are seeing it reject that level, so we'll see what happens. But yeah.
Yeah, and I would say it's interesting. I don't know if Nick talked about it, but basically, right after the war speech on the last Fed meeting, the yields have just been going up and up and up because Wars decided to exclude forward guidance. Besant is probably not happy about that. So could there be some infighting between Kevin Warsh and Scott Besant, or could there be, let's say, a kind of a mix-up of the direction they want to take the market, because I think Kevin Warsh wants to be mostly hands-off and let the market dictate the rate, while Besant basically just did a intervention forcing the yields lower and setting the line in the sand. So it's a very interesting time to be in the markets. But I guess that for traders, the next question is, does this continue or does it go up eventually? And I think it goes up eventually. I think we go to ATH, or not the ATH, but I think we take out the high on the 10-year and the 30-year.
Okay. I kind of want to say that there was clear reason for them to act. Like them seeing it at that level was probably, I mean, it was definitely enough for them to have some sort of intervention, some financial engineering. So I do think that if they were to see that not work out, that they exercise that little bonus clause that they threw in there to up the buying back even more. And then after that, if it continues to not work, well, then yes, we have some problems there. But we have the 10-year here at like a level of resistance here, you could call it. So I'm kind of hoping that it stalls out there. I'm also like hoping that there's some kind of end to the Middle East stuff too. And if that does happen, then that's enough to just, have yields roll over a little bit too. But there's a lot of things driving this, Marco, that I can't really ignore, right? You have the confidence in the Fed is diminishing, especially as you have less forward guidance. So
Yep.
that's going to cause yields to go higher. You also have the war in the Middle East, which is also going to cause yields to go higher. And then you have our US debts, which is also going to cause yields to go higher. So there's a lot of forces, not just one that's bringing it higher. So even if one of these goes away, you still have, two or one things moving it higher. So it's going to take a lot to really slow this train down, right? But the other question becomes, well, at what level does the market start to freak out? Is it at 5.4, 5.6, 5.8? Right? That's too I don't know. Because if you look at Japan's yields have been just grinding higher for a long time, and people know it. They've been seeing it. They were freaking out
Absolutely.
at 2%, right? Like right over here, they're like, oh my God, what is going on here? But you're still
Yep.
seeing a grind higher. You're not really seeing the big reaction that you would expect to see. But I will say, the more that you defer, the more leverage that's getting piled into the system, then the bigger the reaction is going to be when it actually does happen, when you actually do get a pop. So that's
Yep.
the only thing that concerns me. So I think similar to Japan, they've voiced it like this when it comes to like dollar yen and stuff. It's like, we are monitoring the levels, but we're more concerned as to the speed of the depreciation. So in this case, the bond market, I would imagine that the Fed's also like, or the Treasury's like, we understand the yields is a problem, but if they start to rapidly increase, then that's where you have to like start intervening or start to get creative, maybe do some more financial engineering. But I think like similar to the war in the Middle East and stuff, like, when this was going on with oil, the market knew that was a problem, but it didn't care. It just kept going higher and higher and higher and said eventually it's going to get taken care of. So I could imagine that could possibly happen too with the yield story. Is like, they know it's a problem. They see it, similar to Japan. They see it, but eventually it's going to go away. But if you start to see candles like this, then you're like, oh crap, okay, things are breaking. So until you see something like that, then I really wouldn't freak out too much, if that makes sense.
Yeah, that's like also the question: when will the market actually freak out? And we can go ahead and talk about crucial levels, and we can just sound like perma bears, like people for the S&P, and the S&P just always keeps on going up until it, of course, eventually does have a 20%, 30% correction. But I'm guessing the Fed and the Treasury is just pray and delay. That seems to be the tactic. How do we take care of money printing? Well, we just print more money. I guess that was kind of the solution that the Treasury thought about. So they essentially wanted to kind of, let's say, save or slow down the appreciation of the yield by sacrificing the dollar. Just putting money into the system, basically like quantitative easing, but it's not quantitative easing. It's kind of moving money around. So out of the dollar into bonds. So that's never going to be a permanent solution. Like things have to balance out. You cannot just move money from one bucket into another and for that to have a massive effect. That's why I'm more and more thinking that we go to higher yields, and that's going to be the theme for the next few weeks, months. Now the question is that bullish or bearish for the US dollar? Because during the sell-off, the dollar sold off as well yesterday. But if yields start creeping up higher, is that maybe bullish for the dollar? I don't know. It gets a bit confusing at that point.
I love how you said it though, and you described it perfect. Like pray and delay, and hope that it gets fixed at one point. And yeah, they're definitely just doing creative financial engineering. They're essentially just changing the money factor, right? They're just moving numbers around, but the actual what it is still what it is. I also have that question too, Marco. Like if you see long end higher, does that mean dollar bullishness? Because usually the very vanilla understanding is yield higher, yields lower, dollar lower. But I think what you've been seeing here is you've definitely seen yield higher on the long end, but you're seeing dollar softening. So I think the question is more so what happens with the short end of the curve is what I'm really referencing here. So as long as I see the short end lower, then that's dollar lower. If I see the short end start to rise, well, then that's probably going to be dollar higher. So I see more correlation between the short end and the dollar versus the long end of the dollar. So I'm going to be, when it comes to like dollar directionness in the short term, I'm going to be looking at this chart right here. When it comes to a potential big unwind, a freak out in the market, then I'm going to be looking at this chart right here, the 30.
That makes a lot of sense. That makes a lot of sense because the 2 years should be directly correlated with the Fed policy. So if it goes down, it's dovish, dollar goes down. If it goes up, Fed is hawkish, dollar goes up. Personally, I'm going to remain with the bet that the Fed doesn't do anything this year, that they just stay neutral. I would love to get some more forward guidance from Warsh. I think also he probably noticed in the last meeting, like it was such a stupid meeting where he just dodged all of the questions. It doesn't benefit anyone to do that. So maybe he changes his approach a bit, talks a little bit more about the forward guidance and the actual metrics that the Fed is using, which last time he didn't mention at all. So he wanted to keep everyone in the dark. And I think that's just a bad strategy. Like the bond market had a immediate reaction to that. They were like, "You're not going to say anything? Okay, fine. You're not going to hike either? Well, we're going to sell the crap out of it." So I think that he probably realized that's not the smartest path to lead a meeting.
I wonder what the people in the room think, like if they like that approach or not, or
no.
Like I know he's trying to bring change to the Fed, and I can't knock the guy for doing that. I think being innovative is a great trait to have, especially as a leader. But I just wonder how it's received within the Fed and with the Treasury as well. Like, I understand the intent behind no forward guidance, but if it's not or like if the market's not digesting that well, or is the lack of forward guidance due to something else, right? Then I think that's a problem. And I think the market's starting to like not like that. But we'll see if he changes his approach. But yeah, I think he's gonna have to change some things, and I think maybe Jackson Hole could be a pivot point. Maybe during Jackson Hole he releases more information or whatever, or he's more vocal than usual, and maybe the market likes that.
Yeah, I would say chairman of the Fed, one of the toughest jobs that are not physical in the world, because whatever you do, it's of course more tough to be to dive and fix oil pipes at the bottom of the ocean. But when it comes to jobs that are purely like not physical, I would say that's one of the toughest, because whatever you do, you're gonna leave some people unhappy. And the world is usually like 50% doves, 50% hawks. So if you hike, they're gonna hate you. If you cut, they're gonna hate you. Same thing happened to Powell and to pretty much every person before him. So I have to admit it's a super tough job, and bringing a change to the Fed is again super hard because you're gonna get a lot of pushback. I just think no forward guidance is something that is not gonna benefit anyone. But that's again my opinion, and I think the market agrees with me because the bond market went crazy. With words, you can actually do a lot. You don't even have to hike or cut, but if you can be a good speaker and try to calm down the bond market and give a little bit of forward guidance, I think that would have helped. I think the effect would have been much less dramatic, and you wouldn't see such a huge explosion in the long end after his speech. I wanted to say one more thing, but I forgot. Anyway, what's your take on positions at the moment? So you had a great day yesterday, which definitely congrats on that. Dollar Swiss, amazing position. So awesome work. What are you doing today?
That's the only one I have still running on the prop accounts on my live. I'm completely flat, but I'm looking for a re. So if you do get a pullback in dollar Swiss and this level of resistance holds quite nicely, then I am re-entering on my live account here and taking it lower. Same situation with euro dollar. I have a limit order on this prop account and on my live account on the same exact level here. So if you get a retest of the 200-day moving average, which is essentially the 200-day moving average on the DXY, then I'm going to be taking this to the upside. And then when it comes to the other trades I have on my mind, gold is one of them. So I have two options for this one. I am probably going to take a small stab at it right here with half the usual size to go ahead and try to catch the momentum if it's there. And if it's not there, if I get stopped out, then I really like 4,300 right here. This was some solid support, it seems like. So if we do get a revisit into that area, then I'll be buying with bigger size and then trying to swing trade it higher. This 4,300 level is the 38.2% retracement level. when you zoom out. So if I go just like this, and I put a fib from low to high, you see that this level is right up with the 38.2. So I prefer this level here, but I'm still going to take an attempt up here, most likely.
Okay, that makes a lot of sense. That's a trade that I personally like as well. I think gold is a pretty good bet. Dovish Fed, weaker dollar. If you have some problems in the stock market, like the debasement trade, gold is gonna love that, of course. So gold, pretty good. Bitcoin also like exploding up yesterday, today, very, very nicely. One thing that is interesting, oil is creeping up higher today as well. So I think the markets are also starting to realize that the Middle East will not get resolved this year. Maybe not at all during Trump's administration, maybe not in the next 4 or 5 years. So oil creeping up, is it a big problem? Is it a big concern? I would say not. I think we just stay inside of this elevated range, above 80, below 110. I think we stay in here for the next couple of months, but I don't think it's going to cause a lot of issues. Like even the CPI inflation, it's ticking lower. So it looks like the Middle East is actually not a huge chunk of the CPI print, or it doesn't have such a huge impact as all of the analysts were forecasting that it's going to have, which is pretty weird, if I'm being honest. I thought the CPI would actually go above 4%, above 5%, because this is US oil, it's not Brent. Like Brent oil is a better gauge for the Middle East. US oil is not purely for the US, but very much connected to the US and very much connected to the CPI. So I thought the impact was going to be bigger. Looks like it's not. Any takes on that?
Yeah, that's interesting to me too. That it's doing quite well despite oil being, way elevated from like way over here. I wanted to ask you too, Marco. Like aside from like you mentioned Bitcoin, what are your trade setups? What's on your horizon there, and is Bitcoin one of the options?
So that's actually something that I wanted to mention. You know about the halving cycle. I talked about it a couple of times in the past. So essentially, a halving cycle is a 4-year period on Bitcoin, and there's the bullish part, the bearish part, and then another bullish part. Currently, we had 3 halving cycles in the past, and we are now, if you look at those halving cycles, we are now in the bearish part of the cycle. The bullish part starts in October this year. So what I'm thinking is maybe some people will front run that expectation, and it being the same thing as with SpaceX. So everyone knew the date when the first lockup expires for SpaceX, when the first employee share lockup expires. So the mainstream opinion was on the date of the lockup expiration, SpaceX will drop massively. But the market actually sold days or weeks going into that event, and then on that event you had a big pivot to the upside on SpaceX. Same thing can happen here. A lot of people know about the halving cycle. A lot of people know that it starts in October. So a lot of people may front run the buy on Bitcoin going into October, and in October you may even get a pivot for Bitcoin to go lower. Have we missed the boat? I kind of think so. I think the entry price was there at 65, maybe 60 something, but now 71 and climbing. I don't know. I don't think this is for me. I think the price is now overextended. I like that it broke the 200 EMA or SMA, but I don't think it's a trade for me. Again, the reasoning is solid, like a run up into the halving cycle, into the bullish part of the halving cycle, run up into October. So on the fence, I like gold more.
Me too. I was looking to for one, I don't know too much about crypto in general, but one, I was looking to short at the 200-day moving average. We had this extreme pop yesterday, and you have a continuation of that today. So I think right now, like Bitcoin is starting to wake up there, and because I'm not too educated on crypto, I don't want to just be putting positions on it and hurting myself a little bit and diminishing some profits. But like you said at the end there, I think that the better trade and the obvious one is just going to be gold. It's one where in multiple different scenarios, it still comes out a winner. And so that's what I'm going to be paying attention to.
Yeah, especially because at the end of the day, Bitcoin is kind of like a meme stock. So it's a risky asset. And if you get problems in the risky market or the risk on market, Bitcoin goes down with it. So stocks today not looking so great, kind of flat to bearish. Nasdaq, the best indicator for Bitcoin, down on the day. So I would say Bitcoin on the fence. And when I'm on the fence, I don't do nothing. I basically like gold much more than Bitcoin.
Me too, man. I'm starting to see the appeal of gold. Now I know, man. Now I know why everyone loves it so much. I'm gonna go ahead and pivot out here, Marco, for your portion of your solo segment. One thing I will say, the VIX here is up 7%. We'll see if there's some follow through with that. It's still in the teens, so it's still sleeping up there. But if it starts to wake up, that could be problematic. But thank you, Marco, so much for the lovely conversation, man. As always, we'll talk tomorrow on Friday. And one thing I will say before I go ahead and go, guys, go ahead and join the Telegram channel. It is completely free for you to join. So I'll say it once again. You guys will love it. You have bonus content. You have chart markups. You have discount codes for your prop firms. All of that good stuff. You can find it for free in the Telegram channel. There is no barrier to entry right there. But thank you, Marco. And we'll talk tomorrow.
Thank you, Alan. And if you want to go raid some trading streams and talk about gold in the comments, let me know. I'm down for it.
Alrighty. Yeah, think about it.
See you on Monday. Goodbye.
Alrighty. Bye-bye.
Okay. Let us continue with the show. So let me get prepared here. Let's just hide this. So 10-year, a huge rejection, kind of a V reversal on the 1 hour probably. Yeah, already looking like a V reversal. Again, like Brent Donnelly, I follow his newsletters, and he mentioned that he's not convinced about this drop in the yields, that it's just a one-time thing, that it could easily be what we were getting on USD JPY for a long time now. And that's basically huge move lower on some sort of an intervention or scare, and then a retrace of most of the move, and then all-time highs or new highs. Move lower, intervention, new highs. Move lower, intervention, probably we then grind up to new highs. That is how I'm seeing this. Now the Aussie dollar position that I have, pretty good day yesterday. For now, I'm gonna stick to this. Okay, just a second. They have some scammers calling me. Unfortunately, I've switched through a couple of brokers, and I think one of them sold my personal information to a scam group. So they keep calling me, and once you like decline the number, they call you from a different number, so you can never block them. It's a mess. But I heard the hack is, so when a scammer is calling you, you need to answer the phone, put it in a metal pan, okay, cover it with a metal pan, take a hammer or take something that is metal and slam on the pan as hard as you can. And the chances are, if the scammer has headphones on, he'll be deaf for at least a couple of minutes. So yeah, or you can start the call and talk really quiet so that he puts the headphones on like max volume, and then you put it in a pan and you hit the pan. So I'm gonna try that next when I'm off stream. But anyway, Aussie dollar, holding it for now. I'm thinking of putting the stop loss to break even, because if the yields will continue going up, especially the long end, is that bearish? Is that bullish for the dollar? No one knows. So maybe it's best to focus on the short term, as Alan said. So if the short term is going up, that's hawkish, that is bullish USD. If the short term is going down, that is dovish, and that is bearish USD. Yesterday, the 2-year did nothing. So the 2-year did nothing, and the dollar was riding off of the drop in the long end, right? What is hurting my AU position is the data that we had for Australia, the employment data. So got a bit, what they say, unlucky. I wouldn't talk about luck when it comes to trading. It's all probabilities. You either have an edge or you don't have it. So the numbers came in worse than expected. Unemployment rate came in higher than expected. So not the best story, but not that bad either. The revisions for last meeting were revised higher, so that's hawkish. Yeah, that's hawkish. Let's look at the next print. Let's look at the next print. If I go to the Edge Finder, I go to the labor unemployment. Look at the Aussie. It's slowly trickling up. Slowly trickling up. I mean, we had 4.5 and now we're at 4.5 again. If you compare it to other economies, I wouldn't really say it's a problem. Well, it is on an uptrend for sure. So long term, just for Australia, it's a problem. But when you compare it to other countries like Europe or countries in Europe, it's worse. The unemployment is at 6.3%. So, but when we're talking about short-term positioning, every data point matters. I'm gonna look into it a bit more, see what the next data point we have for the Aussie. Let's just scroll through this. Actually, inflation is next week on Wednesday. Okay, let's go. Inflation next week on Wednesday. If inflation comes in higher than expected, that would be good for me. Let's see, inflation, CPI, AUD, slowly trickling lower. So I'm not sure why the RBA was so hawkish the last time, and that there were so many dissenters. But one more thing, the Aussie is connected. The Aussie as a currency is connected to the price of oil, and oil is up on the day. And oil could maybe continue going up in the next few days, weeks. Hit 105. It could happen. Hit 100 at least. So could that be a bullish force? Yes. The main thesis behind this position is still intact. So the main reasoning to be in this position is I'm betting on a dovish Fed. Have they fixed the website? I did my previous segment and the website was not working. Now it's working. Okay, awesome, amazing. A repricing here, that's what I want to see. The market is saying there's only a 32.8% chance of no change. I'm saying this should be at 90 to 95%. So the repricing there should be bearish for the US dollar. And that's what I'm mainly betting on. I'm mainly betting on that we don't get any rate hikes this year. So no matter what you buy, it should work fine. I do want to mention the sponsor of today's show. So if you're looking to get funded, do take a look at Ola Prime. So Ola Prime, you can get 20% off with A1 Live. A couple of things about the prop firms. So there's no consistency rule, which is great for swing traders. Okay, great for swing traders. They have a pretty good Trustpilot. Do take a look. Do read the reviews. Okay. So 4.5 out of 5, 3.3K reviews. Read through them. A 5-star to 1-star ratio. Pretty healthy, I would say, especially for this niche. We had a couple of traders in the A1 Discord who have gotten steady payouts and have had a pretty good experience. So talk to other traders, read the reviews, use A1 Live, get 20% off. If you're a swing trader, this is a really, really good option. So as far as my watch list goes, I only have a trade on the Aussie dollar. I got out of Swiss yen, by the way. So Swiss yen, I sold at 199.978. Taken 60% off somewhere near the bottom and taken 30% off yesterday. The net win was 1.64%. So that was the net result. Really happy with the trade. I'm out of it. And I'm looking for maybe we can do euro yen. So I'm thinking maybe we can sell the euro yen because I want to bet on some yen strength. And euro, in my opinion, is kind of a weak currency, or will be a weak currency pretty soon. You're getting the energy crisis right now. I mean, energy is elevated. Winter is coming, like Game of Thrones. Europe is a big importer of energy. So energy is more expensive. Europe will need to spend more money on energy. They will need to use euros to buy dollars, to buy energy. Euro, I think, is going to be bearish. and the yen bullish, you get my point. Sell euro yen could be a good proposition, except on euro yen. Where's my euro yen? Here. The swaps can be high, so the swaps can be problematic. If I hold this for 1 month, 2 months, 3 months, swaps can really eat up the profit. Your take on Swiss franc? Household and energy inflation is still high for the Aussie. Can CHF replace the yen as a carry trade considering their low interest rate? Absolutely it can. Yes. The only problem with that is if you look at the charts, like Swiss has mostly been appreciating against the other currencies. So if you want to do a carry trade, you would prefer for the currency that you sell to lose value, like dollar yen. This was an amazing carry trade because you got positive swaps and you got the appreciation of the dollar against the yen. Well, when it comes to, let's say, USD Swiss, this thing has mostly been moving lower. Let's just remove this as well. This has been mostly moving lower, which tells you, yes, you get positive swaps, but the problem with that is your investment loses value over time because you bought the dollar, you sold the Swiss. That's the problem with using the Swiss as a carry trade option. Anyway, I have ran out of time. Thank you guys very much for watching. I won't be streaming tomorrow. You can catch me again on Monday. I wish you guys a great rest of the week, a happy weekend, and do not go anywhere because we have Tiger coming on in 30 seconds. So that's it. Thank you, and see you on Monday.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? How are we doing today? Hope you're doing wonderful out there. Back to close out the show today. Definitely keep Nick's code in mind, A1 Live over at olaprime.com if you are looking for that discount on the account of your choice. QR code is there as well if you would like to go that route. So unemployment claims, that was obviously what we had today. That it wasn't really a gigantic report, but it's a important report we get every single week. Did come out a little bit better than we did have it last week. I think last week's came with a revision. If we go back over here real quickly to the, let's see, labor data, go back over here to unemployment claims. We had 7, I think it was 7 straight at one point. Cooler readings going back to this, what was that, June 25th reading. The red dots, as always, are the forecast. Top of the blue bars are the actual numbers. These things have a little bit of revisions from time to time, but yeah, as far as last week's, we had gotten a 209,000 count, but they revised it up 3,000 to 212,000. So with today's cooler reading coming in after that one blip on the radar where we missed, not only did we save face about 4,000 on this report, but because that jumped up, it was about a 6,000 job less claims than it was last week. So that's definitely some welcome news for the dollar, even though it's still pretty much down in the basement as far as the beat rate, what I just call the beat rate. Keep things easy word wise. And I thought a picture is worth 1,000 words for you guys. So just to see the dollar little graph down here, to see where we were back on June 29th, whenever we were still at that 100% beat rate. I just figured this would be a cool picture to show you guys, just kind of the decline of the economic calendar for the dollar, the demise, if you will, when we're talking about the why we get into a trade period. Outside of a MPMI, the manufacturing PMI beat that we had back on August 3rd. We had that one little blip just very shortly to the upside, followed by the CPI, I think went from bearish to neutral. Okay. So that's been the only two decent pieces of good news, only to get turned around and taken away. And then we come into today, we had the beat rate on the claims. So this will bump up just a little bit from 18% beat rate to 27%. So will that remain? Or it can't get any worse from here, can it? when we're talking about the data? Well, it sure could get a little bit worse. We could definitely see, and there you go. There's your jobless claims update there. Unemployment rate, manufacturing PMI is really the only thing keeping us on the board at this time when it comes to these red folder news events that we look at every single day. So guys, as always, let me know what tickers that you're looking at. Just thought I would lead off with that. That's just a picture's worth 1,000 words, right? So, with the dollar, it's kind of being stuck in limbo between just terrible eco results, but also you got still the geopolitical uncertainty, which new rounds of strikes could push it up. And then, of course, we had yesterday's buyback headline for the bonds that just kind of throws a wrench in everything. Big drop, a little bit of retracement. So I'm curious to see, are you guys buying the dollar overall? Are you selling the dollar overall? Or are you just sitting on your hands until we start getting some better data or better results? Let me know what you guys think. Curious about that, because that's obviously a very big, hot topic. But hey, at the end of the day, we got the dollar over here on all of our most of our currency pairs for the top setups. Pound dollar still leading the way among the major pairs. And then we still do have, of course, Euro dollar, Aussie dollar, and I think Kiwi dollar. Yeah. So we're still pretty much the same. Dollar Swiss, dollar CAD are in the basement. Definitely looking for some possible shorts in those. And I think for like 5 minutes, dollar yen was showing us a little bit of a bullish reading yesterday, but I think it's back off. So, hey, 6 out of 7 are there to sell the dollar. So that's just the data. That's taking everything into consideration, the fundamentals, the sentiment. And now that the trends have turned around on some of the dollar pairs, hey, we can start looking for the dollar shorts as far as the way I trade supply and demand. So, anyway, let's go have a look at some of these assets, guys. I'm going to lead off with gold because I like what we're seeing today. We did, of course, have gold and silver just taken off to the upside after that bonds headline yesterday, and not to mention the fact that gold itself is still giving us a very bullish +10 score. So things are looking pretty good. Totally agree with what Alan said earlier on the show, guys. It's one of them sketchier places to be trying to short gold. But if you're selling to buy, yeah, that's one way to play. It's just a scary thing to do. It's something I almost never do. So be careful if you're trying to go against the grain, go against the trend, going against the fundamentals, going against the reaction that we saw from the bonds buyback headline yesterday. It's just one of those things where you're literally, fighting the trend. Okay. The trend is not a very kind thing if you're trying to fight it. So, but having said that, if we do get a discount, well, I'm still keeping my eye on that 1 hour zone that we did get created from the bond buyback gap that we saw. Talking about this gap here. And it also, just to keep in mind that supply zone that we finally chewed through on the 4 hour, that one wasn't so much my question as it was the daily. Okay, the daily supply. Well, the cool thing is, not only did we break through it, but we closed the very top, even on a daily, and I'm just now seeing this on a daily. I knew 4 hour had closed, but even the daily candle closed above the zone. So this is my go ahead to just straight up wait for a retracement and see if I can't get a good bounce off a demand zone for the buy. I was questioning this yesterday with you guys live on stream because this candle hadn't closed. The 4 hour candle hadn't closed. Hell, even the 1 hour candle hadn't closed. So now that we've continued and finished this piece of the cycle that I wanted to see, just like I drew up with my projection candle here, where I had it kind of drawn it one time up here in this area, right? That's exactly what I want to see. So I don't know why I got that green candle there, but delete that. So yeah, just wait for a retracement on this. Now, that 4 hour supply did kind of create a little bit of a double top, double bottom. So a little bit of resistance that could become support. So I definitely like this as a possible spot for me personally to, just connecting the top here, top of this top, top of this top. That's kind of its own demand. Okay. That's its own support becoming resistance. Now, my favorite zone is all the way down here at the 43.74 level. But this could, just like Alan was talking about earlier, this could potentially offer up a little spot to start accumulating. I mean, for me, I typically like to buy my full position at a zone, at whatever strong zone I find. But I could definitely see putting in a partial position up here. And then if it drops further, great. It's offered a better discount to put in the final piece of my position down here at that zone I identified. So, for me, if I were to get into this trade, if we were to come down to this area, well, naturally for me, I got to look for a zone according to the way I trade. The one, I guess you could call it a little bit of a sketchy part about buying in that area for the way I trade is the fact I'd have to go all the way down to about a 10-minute time frame before I find a decent looking zone. And we're at this point identifying this group of candles here, but this is the first place where I see a little bit of that gap. From the top of this candle, leg out to the bottom of this candle. I don't know that that's a very strong gap, but what makes me eager to possibly get a little bit of aggressive here is the fact that that's still the thick of the bond buyback liquidity that we were experiencing yesterday. Okay, all the volume that came into the market, all the smart money, all the retail money too, right? Everybody, because we know gold is still heavily long according to the retail traders as well. We can see that by the put to call ratios, the put and call volume, the retail sentiment. So just like Nick's been talking about of late, it's going to be a lot better to be looking to buy a bounce if we start seeing them sell out. Okay, sell out of their longs to provide that liquidity, that sell liquidity that banks and smart money need to fuel their buy orders. So yeah, I could see definitely putting in a little bit of a position here. I mean, I'd have to draw my demand zone to look like this, and I'll probably just go ahead and incorporate that wick down there as well. But this would essentially be my entry. Okay. As always, not financial advice. And look, and it just so happens, look at where we're at. See, we're already bouncing into that area. Let me clean this up just a little bit. We already know that that's all there. Get this out of the way a little bit, try to clean this up a little bit. So this is kind of the new area. Now I already know we've broken through the daily supply, the 4 hour supply. So that's old news to me at this point, but this now becomes my focal point. Well, I tell you, I already missed that entry. So I would definitely not be FOMOing anywhere up here. I think it's still pretty pricey relative to the curve analysis, looking to see if we're buying low on the curve, buying in discount. To me, this is buying in retail, okay, buying in the premium area. So I still need a retracement because I didn't get that bounce from there. At this point, because I missed it, I'll probably just have to wait until we do get down to the ultimate zone I'm interested in, which is again going to be this one down here at 43.75. Woke up late today, so I was not on the computer at 7 a.m. my time to see that, unfortunately. But anyway, So yeah, that would have been a good option right there, but it's too late. So I'll just continue to wait for that discount down there. Now, stop loss. Had I gotten into this position up here, guys, I would have still wanted to put my stop loss all the way down here because again, this is my favorite zone. This was the one that started it all. This was the last hourly candle base before that news popped out yesterday, giving us that strong gap showing demand heavily exceeded supply. So that's going to be the look for me on gold. But again, all made better today because we finally got that break and close on a daily and a 4-hour on the daily supply. So definitely increased my confidence in that move today. And let me see what you guys got over here. Am I currently in any trades? Yeah, actually, yeah. Aussie yen, guys. I did pop onto an Aussie yen long yesterday. I think I might have flirted with you guys about that. Yeah, we were getting a +5. So Aussie yen, I did get into. We had that big push at first from that news, and then let's see here. Let me go to the correct time frame. Yeah, right here. So we bounced into this hourly demand zone I was watching. It's a 4-hour or 1-hour confluence. And we did end up going through the zone, but we had just a very, very, very strong rejection from the bond buyback news. So when price came back up, it created a new minor structure. Okay. So what I wanted to see was a break of that structure on the retrace after the retracement, right? So this was a little bit more of, you could call this a little bit more of a breakout. Okay. I know I talk dirty about breakout trades, but this is in context of knowing that we had a strong demand zone and we had a strong headline from the bonds buyback. So when it created that new low, that new structure, well, we're still technically in a lower low, lower high. So I just need to see a change of character from this point right here. I guess a little more accurate would have been right here. So basically I just waited for a retracement back into demand and then a breakout. So yeah, the ultimate spot to get into this trade would have been 112.70. My entry was just above 112.90. So I do lose this little bit of profit, but I'm not going for a gigantic reward to risk on this. I think a 2-to-1 is what I actually drew up. And then I just put my stop loss down here below all this. Okay. Stop loss below. Ultimately, originally, my stop loss would have been a little higher up because I'm just basically looking at the demand zone. But I had to let volatility kind of shuffle and shake out the weak hands. And ultimately, it did push through the zone. But the point is, it caught its bid eventually, and now it changed character to the opposite side. Okay. So yeah, I ended up getting in long here, and I think I have a take profit somewhere up in this area. I think I just went to the top. That's what it was. So just a simple 2-to-1 to this spot up here. And no, actually I took, I can't remember. I don't have my chart on me. I think it was 2-to-1. I think it was this high point up here that I'm looking to take profit. So probably not going to be a 1 or 2 day trade. This likely, depending on how the rest of today and tomorrow shuffles out, if it continues to push higher, getting up to that 113.50, then that might buy me a little bit of confidence to hold that over the weekend because my stop loss is well below it. It's way down here. Okay. So that's the current trade I'm at, and I'll keep you guys updated on it. Yeah. But yeah, Aussie dollar +5 on the top setups. It's not 100% the way that I trade supply and demand, but at the end of the day, the demand did hold. So I'm going to stick with that. You guys also put on here CAD, Yen, Thado. There's Mr. Thado. Yeah, let's go look at CAD Yen for you. Get our daily on the right, get our 4-hour on the left. All right, so trend is starting to get its upwards push. All the yen pairs, of course, had a lot of fun from that big intervention that we had a couple of weeks ago. This particular one for CAD yen dropped it all the way down into a deeper demand zone that I was watching at one time. Now, this all happened too fast. Dollar yen, remember, dropped 484 pips in that 45-minute window. So the volatility was just crazy. Dollar yen's been known to drop even larger amounts of pips. I've seen 1,000 pips. I've seen 2,000 pips. I saw 3,000 pips whenever the Swiss franc depegged from the dollar back in 2015. Euro Swiss, dollar Swiss. Go look at a chart of 2015, January 2015, guys, sometime, if you want to go see how how big some of these pairs move whenever banks depeg. So, that's just something I always have in the back of my mind. Well, yeah, it gave a 400 pip drop, 500 pip drop, but that doesn't mean it can't go 800, 900, 1,000 pips. So I didn't feel comfortable about, taking a chance on this zone, even though I liked it. Okay. You had a nice daily. You had a 4-hour confluence. You had a 1-hour confluence. That's why I have a white line in the middle. So you had 3 time frames lining up quite nicely. You had a double bottom here, which created liquidity. Sell orders. Sell orders banks need to fuel their buy orders, and then not to mention the demand zone itself. I got to tell you, though, I didn't have the balls to have a limit order down there. Of course, price is up here. We don't walk in thinking, oh, price is going to drop 400, 500, 600 pips. We don't know that. Okay. So it just dropped in too quick. Nevertheless, the demand zone worked out because it bounced beautifully. And ever since that point, well, now my moving averages have finally caught up to the bullish side. Okay. That's the 8 and the 21 EMA, the alligator's mouth opening to the upside. So I say all that to say I like the upwards trend at this point. So that's giving me permission to go look over here on a 4-hour and see if we can't find a spot to trade this thing. Now, remember, guys, on my intermediate time or on my execution time frame, I use a different set of moving averages. I use a 50, 200. If I'm trying to buy long, I want to see my 50, which is the light blue line. I want to see that cross above the 200, which is the dark blue line. 200, a very popular moving average out there, whether you look at it from an EMA or an SMA perspective, for that matter, a simple or an exponential moving average. I just like exponential because I like to show a little bit more favoritism to the most recent candles. Okay, weighted more to the recent candles. So that's why I use the EMA. Everybody has their own reason. I don't think there's a right or wrong way to do it. The guys were talking about this last week, talking about simple moving averages versus exponential moving averages. Sometimes the EMAs clearly show support resistance. Sometimes the SMAs show support resistance. So I don't think there's a right or wrong answer. It just depends on the crowd for that particular period of time. Let me know what you guys think on that. But anyway, when I go to my 4-hour, I've started to see my 50 climbing above the 200. So that's good too. That's where I find my demand zones, by the way, guys. Now, here's the thing with CAD yen. I don't really see any great demand zones. This has just been a very grindy up move. So while I don't see anything on a 4-hour, I'd probably have to start playing around in the smaller time frames. On the 4-hour chart, I see that we've broken a structure. Okay, we've continued to break structures to the upside. So that tells me that this is going to be my current impulse move. Right? That's going to be a bullish impulse move because, well, we broke this structure. It's a very simple definition. So does this impulse move give me a demand zone on a smaller time frame? Well, this one right here, I'm kind of curious to see what we got in here. The one thing I can tell you already that I dislike is the fact that, yeah, we did have 3, 4, 5 green candles coming out of there, but we didn't really have any volume right here. So I'll have to drop. The rule of 4s tell me to divide it by 4. 4 hours divided by 4 is 1 hour, and go down to my execution time frame. Well, if I go to my execution time frame where I literally hit the buy and sell button, well, clearly right here, this demand is screaming at me, but do I have the volume to back it up? According to Wyckoff methods, does effort match result? Well, not really. That leg out, that second candle, look how tiny the volume was. We had below average volume followed by barely an average volume bar on this one here. There's not a ton of volume in this area. The volume was all the way down here from the yesterday's bonds headline. Well, I'd probably have to ignore this and drop farther to see if we have anything down there. Probably, I can tell you right now, even if I go all the way down to like a 5-minute, it's going to get sketchy. It's going to get sketchy, but there's probably going to be some orders hanging out down here. But I still don't see any gaps. I still don't see any gaps showing demand heavily exceeded supply. Now, clearly it did because of the volume. So I would probably chance this just a little bit and just see what kind of happens for, let's just call it this whole red candle right here. Okay. Be interested to see what price looks like if we get all the way down here. If we get anything super strong rejection, well, then maybe we got something. I don't know. That's a little too wide for my taste. I got to be honest with you. So, yeah, I don't know. I'm trying to split hairs over here. That's too wide, and I don't see any gaps on the lower time frames. It was a pretty steady push up for CAD yen. So, yeah, I don't see anything. I really don't. What I would probably prefer to see for you, Thedo, is just to get if I get my projection line, a little bit higher of a push up, showing that it's, it's not just barely breaking the structure, it's doing it with gusto, and start coming down here and giving us some type of basing action, followed by a strong move, decline, and then a buy. Now, this is a lot of wishing, but I just need to see a newly created demand zone with a strong gap out with volume. The gap. Okay. So that's kind of my billiards move, my 9-ball move, my 8-ball move, looking 3, 4, 5 balls ahead, saying, hey, if this, then this. It's an if-then statement. But I don't want to worry about brain power and utilizing it on that when I can go look at other assets. So that's kind of a long way of saying I don't got anything for you on that. But even if I don't have something, guys, I try to always explain it out so that you at least understand the purpose or the reasoning behind it, rather than just looking at a chart and saying, I don't see anything. Let's go to the next. So hope that helps. Hope that makes sense. Curious, how come you're waiting for a retracement into the demand on gold for possible buys instead of the daily demand? Well, the daily demand, you're asking about gold? Let's go back to gold for a second. I prefer daily and 4-hour if you want to know the honest truth, right? We bounced through that supply, like I mentioned already. Sorry, guys, I got a cat hair on my nose and I can't get it off. Rather than you said instead of the daily demand. Yeah. So if we go back to the daily chart, the nearest daily I see is all the way down here. Now there's one here too, but very little gap. And that 400 call wall on GLD kind of gave it some problems. Kind of went sideways, and it was too close at the time to this supply zone. You could make the argument that now, not to get too many lines on here, but you could make the argument now that this is now a new demand zone, a daily demand right here. I don't know if that's the one you're referring to or not. You could make the argument that's a new demand. It left us a gap, a tiny gap, not enough to write home about, but it did leave us a tiny daily gap from here to here. Now you tell me, does that look very sexy? The top here, skip the leg out, the bottom of the candle after, that's a tiny, tiny gap. Plus, that didn't even go 1 unit of risk. So when a demand zone creates itself, or a supply zone, whatever the range of the zone is, let's call it 50 pips. I have to see price move at least 150 pips before it rebases and returns. That's what creates the stronger reward to risk. Now, I may only take a 2-to-1 reward risk, depending on the new zones that are created on the way back to my entry target. But the point is, the initial move away has got to show some strength. So that's the whole reason I'm not interested in drawing this as a daily. Not to mention, how many basing candles do we have? 1, 2, 3, 4, 5, 6. You might as well call that 7 because it's still within the range before our leg in. So leg in, base, leg out. That's way, 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 way too many candles on any time frame, especially a daily. I don't want to see a weekly base like that, week plus. I need to see 2, maybe 3 basing candles after the leg in and leg out. So that's too much time spent. That's also not offering a decent enough profit reward to risk potential for me for that one. Now down here, that's a different story. Different story, a little bit different story. Probably too many candles down here, but it's at the origin of this overall strong move that we've seen over the last couple of weeks. And it's a long ways. Okay. That's 1 unit this is 1 unit for my zone. And that's more than 3 units all the way up to the top. So that's why if I look at a daily, I'd have to wait for that retracement. This one here, the reason I didn't draw this one up is because it gave a very microscopic gap, but then it started basing sideways for that same one we just looked at. This one based and continued to fly. That's why this is the stronger daily, in my opinion, not to mention the origin of the strong move up. Dollar Canada, a dollar CAD for you, Jeremy? Yeah, let's go look at that for you. Let's see what. Okay. I got a couple minutes left. Let's see. So daily. Let me get this over here. So EMAs look great. I know the daily trend is in my favor. Okay, trend is my friend. So that's your daily. Going down to a 4-hour, you've got a. Let's see. How did I draw this up? I think I focused more on the 1-hour side. Yeah. Okay. Looking at the 1-hour, this is again the origin of that big strong move that we saw from the bond news. This candle here, these candles here. So the retracement of that, just like what we looked at on gold, the equivalence for dollar CAD is that particular candle there. I'm not a fan of, again, just like I showed on gold, I'm not a fan of how many candles are there, but the point is it's the origin of that strong news. Remember, when those types of news events come out, NFP, interest rate statements, things of that nature, wherever price starts spiking with a lot of volume, that's a lot of smart money entering the system. Algorithms, yes. Some retail traders, yes. The ones that were playing Russian roulette and just so happened to miss the sixth chamber that had a bullet in it. So they put a lot of money in, breaks a lot of structures. So when price retraces, they want to defend their territory. If they let price go through, well, they're in the red, right? Because that's where that news event came out. That's where the volume started popping in. That's where the insider traders, guys, you know that there's insider traders and hedge funds and things of that nature, whether they admit it or not, that know this. So the last thing they want to do is get into a short right here on dollar CAD as an example and let price run through. So that's going to be the reason why right now I just so happen to be paying attention to the base headline release of everything, all the currency pairs, all the gold, silver, and items and things I'm trading. So that's why I'm being a little less strict on my candle count preceding the base. Okay. So yeah, I'm still looking dollar CAD at 138.68. As always, guys, not financial advice. That just so happens to be the point I'm looking at for a possible short. Dollar Swiss is right there as well. Where our base just so happens to be a daily 4-hour. So see, to me, dollar Swiss offers the prettier picture. We got a nice daily supply. We got a nice 4-hour supply inside of it. That's 2 sets of eyeballs. We got that leg out liquidity from the bond release. It broke a demand zone. It tagged into the daily on the bottom. And now what's happening? Starting to get a little bit of a retracement. You do have all these swing lows that I had told you guys for a couple weeks now. I was waiting to get broken, which would be a higher time frame change of character to the downside after the series of higher highs and higher lows. That was the first time we started to get that change of character, and it broke not 1, not 2, but 3 structures and a demand zone to boot before finally getting a little bit of halt from the daily zone. So I need a retracement from here for a supply zone to look for a short. So that's the origin of the move, just like I've showed with gold and everything else. And that's going to be my favorite play. Guys, it's already 9:42. What time did I start? Did I start at 9:15 today? I did start at 9:15. I'm already 32 minutes. Guys, sorry, I get to rambling. I need to start getting to more and more of you guys. But it's like story hour every time because, again, I don't want to give you an answer. I just want to explain it, right? I don't want to give you the fish. I want to teach you how to fish. So let me know tomorrow what you guys think about that, or if you'd like me to get to more and more assets or just keep showing those little nuggets of explanation. But either way, James is going to fire me if I don't close the show. So ladies and gentlemen, have a wonderful day out there. Stay safe. We'll see you tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.